Morning, everybody. I'm a little early, but I thought I'd say good morning. Jim, Bobby T, D Rock, Safia, nice to see you guys today. Hope everybody's doing well. Good morning, Alex. How's your week been? You overachievers in the room early. Good morning, Dwight. Everybody moving forward this week? Or is everybody taking a step back? I took a step back this week. It was kind of cool. Um, every day I give you guys a simple plan. And when you learn to read your charts, you're going to want to deviate from that. You're going to want to find more trades. This week, I thought it'd be fun just to go back and trade that simple plan. It's been pretty outstanding. It definitely works. It definitely works. I pulled out the momentum trades, the trying to be first trades, the closing the gap to the large triggers trades, and just focused on being away from fibs. And it's worked out wonderfully. So join me in my quest, guys. You'll dig it. Everybody's bouncing in. I think it sends a notification. Oh no, we started early. So it's Friday. We made it. End of the week. Hopefully you guys have plans for the weekend. Go do something fun that doesn't revolve around sitting in front of a computer screen, right? Maybe a little bit of study, but go play. Go walk on the beach. Go climb a hill in the mountains. Whatever. Do something that's more fun than stressing yourself out. Good morning, Mulu. How are you? Nice to see you. Waiting for someone to come fishing? Man, Bobby, I'll tell you what, we're getting closer and closer. What is today? The 22nd? 8. We uh we pull up anchor in 14 days here in Washington. But it looks like we may end up in the DFW area. So I've got a little bit further of a drive to get to you, but I definitely want to come. My wife has been interviewing like crazy, and I think she's going to fly into Dallas next week and do a final panel interview with a hospital there. So good stuff. I don't know. I'm just along for the ride. It's kind of cool. American Airlines flies direct from Dallas. Perfect. That's way better than driving. Of course, what is that, like a 40-minute flight? That would be a short flight. It's like people that flew between Houston and Dallas. I never understood it. It takes longer to park your car and get through security than it does to just drive. So, all right, guys, it's Friday. Let's do it. 9 a.m. We made it. Um, you guys know I do love routines, and part of my routine is coming in and checking news each and every morning, making sure that there's not something crazy going on that might make the market bump and jump and spike. And you know what I'm realizing? The more that I just speak out loud and listen to myself, that a lot of the times what we're doing every day is we're looking for reactions, right? We're waiting for reactions. We're being patient around areas where reactions may happen because what we realize, and what you should realize, I hope, is that you're not in control of the market, guys. You never have been, and you never will be. There are these deep pockets, people that are coming through, and they're the ones that are creating these trends that we trade with, right? And they're the ones that are creating this momentum that we're looking for. And guys, more importantly, they're the ones that are reacting to these Fibonacci areas that we're learning to respect, right? To not trade into, to trade away from. So I love this picture. This is reminding of us our place in the food chain. The sharks are going to move the markets, guys. The big money investors, the institutional traders, whatever you want to call them, these are the guys that are making everything happen. It's not us. We're small fish in a pond. But we can be remoras. And if you're not real big on marine biology, remoras literally swim next to the sharks, guys. They take advantage of everything that the sharks do. They thrive and they feed off of everything that the sharks create. And that's kind of our role as smaller traders is let these guys take the risks, let these guys establish the momentum, let these guys make everything happen, and then we'll swoop in, take a little payday, and then before the frenzy starts, we'll jump back out, guys. And I love this picture because it really does remind us of where we're at. So at 9:45 a.m., we have high impact news, reaction, right? The sharks, the big money investors, are going to react to the news. If it's positive, they may buy. If it's negative, they may sell. But the thing is we don't know. If it's positive, they may sell. And if it's negative, they may buy. And there's going to be opposing forces, and we never have to get caught in that melee that is the news release. So at 9:45, you can make the decision to sit on your hands, to do absolutely nothing, to wait for the reaction. And then when the reaction settles down and things get back to normal, begin looking for your rules again. So I do that every morning, guys. Every morning I go, when my charts are loading, I go to forexfactory.com, and I just want to make sure I'm not jumping in front of anything. And on that same token, everything that we do in here, the rules that we talk about in the morning are based on advantages and reactions, what these people are causing to happen and how we can capitalize on it. And for those of you that are new, and I know that there's some of you in here, there's a very solid step-by-step path to get to where you want to be. If you're anything like me, you'll fight it a little bit in the beginning. You don't want to post pictures because what if you're wrong, right? I don't want to post pictures, Mark, because I'm just not 100% sure yet. Guys, that is the absolute best time to post pictures, is when you are just a little uncertain on what's happening in your world. Because to minimize your learning curve, I've got so much stuff. My brain is going 1,000 miles an hour this morning. Good luck, everybody. Hey, good morning, Chris. Nice to see you. Guys, to minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw, especially lose or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. That means that you're practicing, you're literally creating muscle memory for failure when you break your rules, when you fight it, when you fight things. How are you going to know the difference as a new user? You're not expected to. You're brand new. You're allowed to be new. So to be sure, you need feedback from me, from us. We are here to help. And if you place a trade on the simulator, if you participate in class, there is zero risk of loss or capital. You need someone to tell you what you did right or wrong when you're new, guys. And this really is part of the educational magic that Nexgen offers. Um, 15 hours every week. I'm available to look at your pictures, to take your questions, to give you feedback in the moment, and to make sure that you have clarity on the concepts that are going to bring you success. The only way that works, hey, good morning, Jose. The only way I'm capable of doing that is if you post your trades in class, right? You have to show me what you're curious about. You have to show me what you're doing so that we can work together to do it better. So I want you to embrace the idea that the person that takes the most pictures and puts them in the room is the person that gets to where they want to be the fastest, because we will identify what's going on, how we can do it better, how we're already doing it wonderful, and every day becomes a step in the right direction. Then the second half of your path to becoming a confident trader is, guys, use that spreadsheet that NextGen gave you. Use that spreadsheet that I give you every morning in this classroom. And all it is a trade journal. Um, every time you take a trade, you're going to post it into your spreadsheet, the first page of your spreadsheet. And you're going to talk about what went on in the trade. You're going to talk about your rules. And then you're going to have a notes section that says, well, this was the result. This is what happened. This is the feedback that I got, right? And I want you to set aside 5 minutes every morning to go back and look at what you did yesterday. Yesterday, some of you may have gotten caught out by the gap theory more than once. So this morning, when you look at your charts, good morning, Sydney, and you say to yourself, holy smokes, I got caught by the gap theory twice yesterday. I'm going to look for it a little more diligently today. I'm going to make sure that I understand it. And that's two losers that I'm going to eliminate from my daily routine. And that's going to allow my great winners to do more to my P&L. So what worked? What didn't work? What felt easy? What felt forced? Ask yourself these questions every morning. And what you're going to find is that the more advantages that you have, the easier your trading feels. Good morning, Farzan. Nice to see you. And it will prepare you for the day, and it will accelerate the learning, guys. I say that without question or hesitation because I see it every day in you guys, and I see it every day in my own trading. I'd go through this routine every day. Also in the spreadsheet, that's the first page, guys. That's the copy of your tracking. Good morning, PFI. The next page is your personal trade setups, your favorite looks, guys. What is it that gets you into the market? I have people that look for high probability trend trades, and that's really the foundation trade, what we talk about in the first hour. I have people that are catching momentum trades. I have people that close the gap back to those large triggers. People looking for HVA trades. There is more than one way to skin a cat. What a horrible picture, but it's a pretty old saying. What's it going to take to get you into the market? Not what did it take to get Bobby in the market, right? What's the trade that Mulu's taken today? What's it going to take to get you in the market? Because trading is an individual event, guys. And you're going to just record your favorite looks and you're going to keep looking at them until they become easy. And then as you start to work on management and chart reading and terminations and all these different things, guys, fill your spreadsheet with a million pictures. And then on the final tab is the client trades, guys. These are what you guys are doing with this software. The software is the highest tech hammer that you can get. And here's 250 pictures of Nexgen users swinging their hammer, taking entries, managing trades, going through doing things. I've added a lot of my own observations from class, guys. If you're a NASDAQ trader, there's a lot of great information to help you trade the NASDAQ. It is not like the S&P. Learn on the S&P, learn on crude oil. It's super smooth and it's an easy market to trade. NASDAQ is a little wound up. But there's ideas on management, on chart reading. And chart reading's key, guys, because you all are going to be chart readers. And then a lot on termination conditions. So I just dropped my copy of the spreadsheet in there, guys. Feel free to steal it. Make it yours. I don't care. There's no copyrights on it. We're going to learn the trigger line of Fibonacci looks for when it's okay to trade. This is the first hour of every class, guys. I am the broken record teacher. I'm going to say the same thing, and we're going to talk about a high probability trend trade. And a high probability trend trade really is nothing more than three rules that give you three advantages. And everything that you do throughout the day should be revolving around advantages. But the high probability trend trade, guys, three simple rules, creating three advantages, and this becomes your recipe for a trade. If you focus on the entry for the high probability trend trade for 20 days, guys, 20 trading days, 30 days in the market, right? Welcome to Nexgen. Here's your first month. What it's going to do is it's going to make you a chart reader. And I'm going to post this in the room. Guys, I'm going to post a lot of stuff in the room today. Please steal it all. Write it down. Chart reading is 90% of your day. Chart reading is what gets you set up to take a trade. So 90% of the time, you're going to be looking at your indicators and you're going to be waiting for advantages. And when the advantages present themselves, that 10% is you pulling the triggers and getting into the trade without hesitation. And doing that without hesitation comes from building trust. Trust comes through repetition. Another reason those pictures are so important. But you're going to be able to look at your workspaces, look at your indicators, and you're going to understand three very key concepts. Three concepts that are going to take you into the rest of your life as a day trader. You're going to understand where the market is likely to continue. And guys, continuation points are entries. That point where the market is most likely to continue doing what it's been doing so that you can capitalize on it. You're going to understand using Fibonacci and momentum where the market is likely to go as you develop a management plan. These areas where the market is likely to go will become your targets. That's where you're going to take profits. And then finally, you're going to understand where the market is likely to stop. And guys, we call these likely to stop areas termination conditions. Termination's right there in the word. It's pretty clear what it does. It can stop the market right in its tracks, guys. It can take away your advantage. You won't have a clear path if you've reached a termination condition. And termination conditions typically happen around fibs, around these yellow one-to-ones, around divergence highs and lows. And it's literally a point in the market where the reaction, where those sharks, those big pocket traders are going to react, where they're going to take profits, where they're going to enter trades. And the closer you get to fibs, the more indecision there is on direction. So we're going to respect and learn to hit these and recognize these termination conditions. And the great thing is when they do create a reaction like a reversal in the market, we're going to be able to capitalize on it through these three simple rules. Good morning, Snorri. And you will be able to take the highest probability trend trade, the trade that we're going to talk about for this first hour, your foundation trade. And this is a trade that typically wins 70 to 80% of the time. And this is a trade that only consists of 3 rules. And it's really going to be simple, guys. So we're going to focus on in the first hour. Whoops, get back up there. We're going to focus in the first hour on this high probability trend trade. And what we're doing is we're pouring concrete, guys. We're going to build an amazing trading plan from the idea that 3 simple rules is an easy way to go. I need you guys simulating. I hear very often in this room, well, I don't want to simulate yet, Mark. I don't feel like I know the rules enough. Guys, I want you to get in there and make every mistake that you can make. That's what simulators for, right? You never get worried about spotty investment choices in Monopoly. It's because it's pretend. It's that's exactly what simulator is. You're learning to recognize things. You're learning to take trades and you're making mistakes so that you can grow from them. Post your pictures, annotate your charts, guys. Take a minute to write everything you see on a chart, to tell me why you did what you did. Write some rules on there. And if you're not sure about the rules, just tell me what you saw. Make sure that you show me your timestamps and your prices so that we can line up your large chart and your small chart. And guys, make sure you're showing me where you entered the market, where you exited the market, because every conversation that we have is going to be spent celebrating victories and looking for ways to execute better. So simulate, post in the room, and then guys, we're going to simplify today. We're going to focus on the high probability trend trade first. We're going to look at a trade where every indicator on every chart lines up for the trade. And the high probability trend trade is 3 rules that create 3 advantages. I'm going to give you these rules right in front of you guys. We're going to keep it super simple. And these 3 rules will take place on only 2 charts. This for me is one of the biggest keys because the human brain tells you that more is better, right? More charts has got to be better than less charts. More indicators has to be better than less indicators. And I'm going to be real honest with you guys. The average brain isn't going to process everything on a chart. So the more you give it to process, the more difficult decision making becomes. It's kind of like if you have your 3 favorite foods in front of you, but you can only pick one, you're going to mull over it for a while. You're going to worry about it for a second. You're going to weigh the odds, and eventually that food truck's going to move on without you because you never made a decision. And that's kind of the idea on 2 charts. We're going to let a large chart lead the way. This is going to be on the Nexgen Coffee Cup series. Large chart leads the way. Large chart defines direction. Large chart defines momentum, and large chart defines areas, guys. 3 very key concepts all happen on the most current bar on a large broad stroke of a brush chart, guys. You don't need to look back 50 bars. You're going to look at what's happening in the moment, and it's going to define those 3: direction, momentum, and areas. Rules 1 and 2 for the high probability trend trade happen from the information that you get on 1 bar on this large chart. And when they're true, you'll have the advantage of momentum, a market that's likely to continue in the direction of the trend, and you'll also have a clear path. There will be nothing between you and your target. And these 2 rules being met, being true, have got to be the precursor for ever turning your attention to a smaller, faster chart. The smaller, faster chart is nothing but a refinement chart, guys. It takes everything that the large chart says and it fights it. And it fights it and gets us right back to that area where the market is likely to continue. And by allowing that little fight, we are going to reduce risk. We're going to increase our profit potential. And rule number 3 is designed to give you that entry right at the point where the market is likely to continue. So your large chart is the large crowd opinion. The large chart is what the sharks are doing, what the sharks have created. I love that analogy of the sharks. The small crowd are you yahoos that have to fight momentum and trend, the people that have to be first, the people that say, even though everything is going up, I'm going to go down because doggone it, I'm so darn smart. Guys, there's a million of those people, and they force what we call a retracement, this tiny pushback counter to the underlying trend. Next-gen users will be able to take advantage of that pushback, and you will be able to enter the market right where it's most likely to continue. That's what rule number 3 does for you. So 2 charts, 3 rules, simplicity, right? Don't overthink it, guys. Day trading doesn't have to be difficult. The easier you keep it, the easier it is. The people that confuse things in day trading are us. So we're going to play off of the premise that there's only two options every time we're looking for our rules to be met. And those options are either your rules are met or they're not, right? If the rules are met, you're going to take a trade. You're going to learn these rules. You're going to take the trade. You're not going to hesitate. We're going to develop trust in these rules. And if your rules aren't met, you are going to train your brain to do absolutely nothing because your investments and your money are worth having those key advantages. And the first advantage is just recognizing the trend. This happens on your large chart. If the large chart's background is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. And now ask yourself right now, whether you're new, whether you've been trading other markets, how many times have you fought the trend and lost, right? It happens all the time, guys. John Novak had a broker in a conversation tell him once, Mr. Novak, I can guarantee you $1 million in your account by the end of the year. And you know, brokers don't say that. So John's like, okay, how are we going to do that? And the broker says, do me a favor, fund it with about 3 million. Fight the trend every chance you get. You should be down to 1 million by the end of the year. And guys, it's a very true story. We all have, Dwight. Because we forget sometimes that we don't create the trend. It's those people in charge that create the trend. Let's go with them, right? Let's hitch a ride on the bus and go the same direction as the bus. So green means up, red means down. We're only looking for rules to be met in the direction of the trend. And the first rule is strong triggers. Because strong triggers create the advantage of momentum, guys. And momentum actually covers a lot of mistakes. It's pretty cool how it does that. Strong triggers in an uptrend means that your small triggers, these solid lines, have broken above your large triggers, these dashed lines. It really is that simple. The space created between small and large lets me know that the odds are favorable for the market to continue up. When the market is in this strong trigger look, when the odds are favorable for the market to continue up, that is the most favorable look for using that smaller chart to buy Fibonacci support. You'll see it on the large chart, on that one bar. You'll see one of these tails forming. This is that pushback on a smaller, faster chart, guys. This is where Nexgen users, right at the bottom of that tail, are entering the market in a long position with the momentum. And typically it pushes that direction. Not always, right? Can't always do it, but more often than not it does. There's another one of those tails. Another opportunity to take advantage of the hard work done by the people that control the market, and we'll take it up right until those trigger lines weaken. And guys, weak trigger lines are when the small trigger lines work inside of the large trigger lines. The momentum has gone away. It turns into an anything can happen up or down scenario. So strong trigger lines, in an uptrend, small's above the large are wide, the space is created. We'll look for our opportunities from the point of separation until they return. In a downtrend, smalls will be below the large will be wide, they'll be angled in the direction of the trend. The separation lets us know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is what you're going to hear all day long in this classroom. And when you have odds favorable momentum, that is the most favorable look for selling Fibonacci resistance to continue with the trend on that smaller, faster chart. Anything can happen. Odds favorable. Guys, give me a Y in the room if you're comfortable with the idea that the separation creates momentum. Give me a Y in the room if you understand that this is the first advantage, guys. We never look for anything else if it's not present. And let's see if we can find how easy it is to recognize. Let's start with this. What direction is the trend on the NASDAQ? Are we going up or down? We're going down. How easy was that? Guys, day one, you can get this. And I'm going to tell you guys, if you're not answering in the room, you're doing yourself a disservice. Do we have odds favorable momentum? Are the small triggers below the large triggers in this downtrend? Is there space between the small and the large? What do you guys think? Yes. Guys, you're a third of the way there in getting this high probability trend trade. Let's go to another market. What direction are we going in the S&P? We're going up. So we're only looking for rules to be met for high probability trend trades long. Do I have odds favorable momentum? Small's above the large are wide, they're angled in the direction of the trend. What do you guys think? Is the first rule met on the S&P? Dwight says yes. Dwight, I agree with you 100%. And then finally, crude oil. We're in an uptrend, and yes, absolutely. I'm at the beginning of that odds favorable momentum, guys, but this is only the first piece of the puzzle. Odds favorable momentum is the first rule. It's that first advantage that gets us looking for the second. And odds favorable momentum does not happen every second of every day. It was interesting that it was happening on all three charts. But odds favorable momentum pushed this market all the way down to those anything can happen triggers. And it's right where those anything can happen triggers happen that the market reversed. It's probably not a coincidence. Probably a Fibonacci area here that creates a reaction. That reaction provides odds favorable momentum, and there's one of those tails, one of those awesome entries that you guys are going to be able to nail with confidence to take you up to a profit target. And then the market gives us those anything can happen triggers again, those weakened triggers. The smalls return to the large, and there's your reversal once again. Creates odds favorable, the market pushes down. And guys, then we get into the biggest safeguard that rule number one can give you. There will be times when the sharks fight. There will be times when the buyers and sellers go head to head, butting heads. David, you're going to be able to pinpoint where the bottom of that tail is most likely to happen, but you're not doing it on your large chart. The first two rules have to be met first, and then we're going to pinpoint this spot on a smaller, faster chart. But this is what it looks like on a large chart. That tail is an opportunity. This tail is an opportunity. We're going to talk about how to gauge them. You guys see how my large triggers are down and my small triggers are up, and then my large and small triggers are down, but the trend is up? This is where buyers and sellers fight, guys. And a lot of users, a lot of traders, a lot of people that don't have the advantage of Nexgen get beat up in consolidating markets because there's a fight going on and you're jumping right in the middle of the schoolyard brawl. When you see this, look, when your triggers don't agree with trend, when they don't agree with one another, this is a great opportunity for you to just sit on your hands and wait and see what happens. Because eventually somebody's going to win. Somebody's going to walk out, and it's going to create odds favorable momentum again, guys. So 90% of what you do during the day is waiting for advantages. 10% will be trading. And that's rule number one. That's the advantage of momentum. And look at how the market pushes up with all that momentum. Look at how the market pushes down with all that momentum. But did you notice that the market stops cold right at these Fibonacci areas? I mean, just hits the brakes. That's our next rule, guys. Termination conditions. Being able to understand where the market is likely to stop. And we're going to make sure that we haven't reached them. Because when you reach a Fibonacci area, when you reach a termination condition, the market may bounce and pull you out of the trade. The market may reverse completely, or the market may just simply go into one of those fight modes where buyers and sellers are just going after it for supremacy. So rule number two says termination conditions must be false. So I'm going to go to the instructions here in the tutorial section, and we're going to talk about what a termination is. And it's just a Fibonacci-based indicator that may reverse the market. And it's going to be based on a comparison of the areas and the T3 trigger lines. So the same triggers that gave you momentum are going to be used to determine whether or not we've reached a termination condition. And the areas that can behave as a termination condition, there's your roadmap for what you're looking at. Red Fibonacci support, red Fibonacci resistance, excuse me, blue Fibonacci support, yellow 1-to-1s, and it can also be these magenta divergence high lines or a cyan divergence low line. Guys, these are the areas that may behave as termination conditions. What we have to do is a little comparison of the area in the triggers. And the first step in identifying termination conditions is price reaches an area. And when I say price reaches an area, I mean that these dynamic Renko bars that are a representation of the current price in the market, see how it says 9104? My price has reached this red Fibonacci area. My price reached this blue Fibonacci area. This is the first step. Right here at the top of this bar, price hadn't reached an area yet. There was still room to get there. This is the first step in determining a termination condition. Your dynamic Renko bars reach the area in question. Whether the market's going up or down, it reaches a fib, it reaches at 1-to-1, it reaches one of those divergence high and low lines. When it reaches the area, all you have to do is ask yourself, where are my trigger lines? If your trigger lines remain above Fibonacci support, no more short trades into that area, no more small chart trades. Rule number 2 isn't met. I don't have a clear path to the downside. If those dynamic Renko bars reach resistance and the trigger lines are all below, no long trades into that area, I don't have a clear path to the upside. And guys, it really is that simple with termination conditions. If price reaches the area, and absolutely none of the trigger lines are capable of breaking through that area in the moment, and they may ultimately break, but in the moment they haven't. No more short or no more long trades in this instance, guys. Don't hope that it breaks. Don't guess that it might break. Because we don't know. We don't know what the reaction will be when price reaches it. So Nexgen users sit on their hands. Sometimes areas break. Areas break all the time, actually. Typically, it happens with odds favorable momentum, but we don't consider an area broken. The path is not clear until both the small and the large triggers get beyond the area, get to the other side of that Fibonacci resistance. You'll see that it begins to behave as support. You'll also notice that when the area breaks, there's odds favorable momentum, and there's one of those potential entries. There's one of those tails on a large chart. So guys, you're going to be able to determine termination conditions. That's difficult to say. And you're going to see them happen all day long. Resistance holds, the triggers don't break, and it pushes it all the way to support. Price reaches the area, the triggers remain above. Nexgen users knew not to go short into that area, and sure enough, it reversed the market. Support holds. Support holds. 1-to-1s hold. Resistance holds. You're going to develop trust in these termination conditions, guys, and you're going to be able to go through that simple process. Price reaches the area. Let's do it together. Price reaches the area. The trigger lines don't break. No more long trades. We don't know what's going to happen. When small and large get past resistance, now the area is broken. It really is that simple, guys. Allow it to be. So here's your recipe. No triggers, no clear path. Both large and small break through. The path is clear. And I'm going to give you guys one other option. I want you to keep it basic in the beginning. You either have a clear path or you don't. Sometimes areas break. Areas break with odds favorable momentum. Areas break with the absolute best of the best momentum that you can have. Weak triggers rarely break areas. If they do, it's a fluke. So when I have this much momentum and my smalls go smashing through, not eking through, not peeking through, not just barely above, but when my small triggers rail through an area with odds favorable momentum, this area has the potential to break because of all that momentum. But it's not broken because the large triggers haven't cleared. Guys, this is what I call a 50-50 look. A 50-50 look means that 50% of the triggers required to break an area have made it through. 50% of the triggers required to break an area have not. It has nothing to do with your chances of success. It's just an area with the potential to break. They break all the time, but it's not a clear path. The second advantage is not present. Therefore, it can't be a high probability trend trade. That's a clear path. We haven't reached Fibonacci resistance, and all of my trigger lines have broken through this area. Guys, we have a clear path to get to 55 if our rules are met. That's how we're going to determine it. We didn't have it here, nor did we have it here. And this happens on every market, guys. But the large chart leads the way. Here we had a clear path, but we didn't have momentum, right? Only one advantage present. But look at when we had momentum, how the market screams and breaks through areas. Momentum can do that. And I'm going to give you a recipe for looking for trades. Price reached Fibonacci support to the tick on the S&P, even with odds favorable momentum, but this is an area that may create a bounce. It's an area that may stop the market. And in the moment, it certainly looks like that's what it's doing. I never know what's going to happen, guys. I'm not that smart. I don't control the market. So let's look at a couple examples of termination conditions. The first one that I'm going to show you is from a divergence low line. Price reaches the area, guys. That's the key to the recipe. When this line forms, it's not a termination condition. This is just a loss of momentum in the market. It's when price reaches the line. Price reaches the area. Where are my trigger lines? They remain above that area. This is a termination condition. Guys, this particular termination condition is called a pivot stop out. Here's your pivot. Here's where they stopped everyone out that tried to go long. You guys can see this visually. You know exactly where it's likely to happen. If this termination condition creates a full reversal, I'm going to label this a strong bottom. And a strong bottom can turn the market, and it sets you up for the highest probability trend trade that you can ever take. 90% of what you do each and every day is just going to be spent reading your indicators, guys. And this picture kind of illustrates that. Price pushes all the way up to Fibonacci resistance. If you were in a long position, this may have been where you took profits. But because no trigger lines have gone through, it is a termination condition. There's nothing to do. Sit on your hands, wait for the reaction. The reaction was that price came all the way back down to Fibonacci support. And once again, absolutely none of the trigger lines break through. Nothing to do here either, guys. 90% of what you do throughout the day is going to be waiting for advantages. Notice how the large triggers don't follow. Your trigger lines give you a lot of information, and there was room for an entire reversal bar back to those large triggers. This is what we call the gap theory, guys. And anything that price hits down here and the large triggers remain a full bar away is a termination condition. Whether it's a fib, whether it's a mid-band, whether it's a one-to-one. This acts as a vacuum in any trades. If you try to take a short trade between here and here, the odds of you getting run over goes up exponentially, guys. Do not try to fight the vacuum. And then from support, the buyers fight back, right? The reaction pushes us up to Fibonacci resistance. None of the triggers break through. Therefore, I'm not going long. Price reaches a divergence high. None of the triggers break through. I'm not going long. Price reaches a second area of resistance. None of the triggers break through. Look at all those termination conditions in one spot, guys. That's got to be powerful, right? I have a pivot stop out and I have Fibonacci resistance. Guys, when this termination creates a full reversal in the market, and then I get separation between my large and the small, and I get one of those tails, well, that's your potential entry for the highest probability trend trade you can take. And guys, this is the trade that typically goes the distance. This is a trade that typically wins 70 to 80% of the time. This is a trade chock full of advantages, and this is your foundation trade, guys. Learning to be patient. Terminations that create a full reversal from the top are what we call a strong top, and a strong top is the precursor for the highest probability trend trade that you can take. But Mark, I had odds favorable momentum. Guys, odds favorable momentum is the first piece of the puzzle, and even with odds favorable momentum, if price reaches the area, just wait for the reaction. Because when you wait for the reaction in the area, it's going to keep you safe. Price reaches Fibonacci support in the form of one-to-ones. Absolutely none of the trigger lines have broke through. Here's the reaction, guys. From the one-to-ones, the buyers tried to take over, but the sellers weren't done, and the buyers tried again, and the sellers weren't done, and the buyers tried again, and the sellers weren't done, and then the buyers won. There's no reason to ever get caught up in this. There's no reason to ever get tricked into making a prediction. Termination creates a full reversal. Full reversal gives you odds favorable momentum, but not a clear path. So if you patiently wait for the odds favorable, for the clear path, there's your highest probability trend trade, guys, and it takes you to Fibonacci resistance. That's the trade, the highest probability trend trade. The trade that typically works 70 to 80% of the time. This is where Nexgen users get paid. Let the sharks fight it out. Nexgen users wait for advantages, guys. It's your best path every time. Give me a Y in the room, please, if you're with me. If you're comfortable, it's a simple recipe. It'll take some time to study. It really will. But guys, this is like a giant red flag. If price reaches resist or support, none of the triggers break. It's a termination at a low. Termination at a low, termination at a low. I'm going to give you guys these pictures so that you can visually see, remind yourself that you don't have to be first. Simply wait for the reaction. That's the lows. Let me find my termination conditions at a high. It's the exact same thing. Price reaches an area, the triggers remain below at a high. No more long trades, guys. Keep yourself safe. What you're going to find is that by removing these guess trades, these prediction trades, you're going to allow your highest probability trend trades to pump that P&L up an awful lot. I'm going to give you one more termination condition. This is going to happen on a smaller, faster chart. Remember, your large chart is one bar, giving a ton of information about what the large crowd means. It's a slow chart. It takes a while to change direction, right? It's like, I don't know, like a 3-point turn in a semi. It just takes a little bit. But sometimes you have a clear path and the market just changes direction. Sometimes you have a clear path and odds favorable. The market changes direction. This final termination condition is the only termination condition that I respect on a smaller, faster chart. The only termination condition that I look for to keep me out of a potential trend trade. And that's 3 divergences in the same price range. 3 divergences in the same price range means that there were 3 losses of momentum right in the same area. You see it when a cyan line prints from the pivot. So 3 from a bottom, 3 from a top may terminate the trend. It may create a push in the opposite direction that isn't tradable. 3 divergences in the same price range and anything can happen triggers makes that even more powerful. And then finally, 3 divergences in the same price range when that third pivot is higher than the previous from a low or lower than the previous from a high, that's a head and shoulders pattern. Makes it more powerful still. So 3 on its own is a termination. 3 with weak triggers is an even stronger termination on the small chart. 3 with weak triggers and a higher pivot from a low or a lower pivot from a high is still stronger. You're going to see these termination conditions. You're going to see this happen on a smaller, faster chart when your large chart's changing direction. This is going to help you see it before it happens on the large chart. So guys, the only time I'm respecting small chart terminations is 3 divergences. You're also going to use this to manage your trades. If you take the perfect entry and 3 divergences print, it's time to get out. It's time to preserve your equity. On this smaller, faster chart, it bounces off of a fib. This isn't a termination on a smaller, faster chart, but 3 divergences is. So guys, the only one that I look for on a small chart, 2 divergences when there's a high probability trend trade brewing, doesn't scare me out of a trade. 1 divergence definitely doesn't. It's that loss of momentum that gives me a push back to my entry. But guys, termination conditions will keep you safe more often than not. Termination conditions are going to give you the advantage of a clear path, or they're going to strip you of that advantage. So when we have momentum, large chart says go. We're flying in the direction of the trend. When the path is clear, it's time to pinpoint where the market is likely to continue, guys. And remember, this is where the small crowd fights. This is where that little group goes against everything that the large crowd is saying. This is where these few people force a pullback, a small retracement in price. And guys, this small retracement in price is going to get you to the point where the market is likely to continue. So when the rules are met, this is the look on your large chart or on your small chart. Everything is up. The trend is up. The triggers are up. The momentum is up. Rule number 3 says that you're going to use a limit order. You're going to wait for the market to come to you. And you're going to wait for the market to come back to an area inside of favorable large triggers, which means, um, unfortunately, Gene, some days there's challenges. Do you draw on your NinjaTrader or do you use a capture program to draw? And I can tell you that it's an unfortunate byproduct of NinjaTrader 8. Capture, okay, good. Some of the things that you can do on NinjaTrader to help that out, going through the clean out is awesome. Sometimes resetting your database helps a lot. I haven't really gotten a lot of crashes lately, but I find that I crash my computer or I crash my NinjaTrader 8 the more that I fidget, the more that I scroll charts, the more that I drag. Um, and some days it seems to happen more than others. I think I've had one crash in the last week. So I would stop drawing the circles on Ninja and start drawing the circles in Capture, and that may be helpful. Awesome, Gene. I'm going to define favorable large triggers for you because, guys, favorable large triggers creates the least amount of risk on a trade. Favorable large triggers means that your large triggers and your synthetic triggers on your small chart are overlapping. They're one on top of the other. Two snakes riding piggyback. Favorable large triggers give you the advantage of a small window of opportunity, and a small window of opportunity creates the lowest amount of risk as you enter a trade. So you're looking for these to be one on top of the other, angled wide in the direction of the trend. That's going to help you reduce risk the most. So when everything is going up, when you've made the decision it's time to look for an entry, you're going to identify your large triggers, your synthetic triggers. Are they angled up? Are they wide? Are they in the direction of the trend? They should be coming up like a shark about to breach in this uptrend. Um, and that's a good one too, George. Thank you. Everything says up, and I'm going to look for the areas that are falling within the trigger lines. And the areas where high probability trend trades originate are Fibonacci support and resistance, mid bands, and yellow one-to-ones. Fibonacci support, mid-band, yellow one-to-ones. Rule number 3 says that I'm going to use a limit order to buy or sell a pullback at an area, fibs, mid-bands, yellow one-to-ones, inside of favorable large triggers. So you've identified your areas, your triggers are favorable, and now you're just waiting for the pullback. Guys, your pullback starts with a reversal bar. After all of these green bars going up, when your stomach starts turning, your palms get sweaty, you're afraid the market's going without you, that small crowd forces a pullback, and it begins with a reversal bar. At the time of the reversal bar, you're going to identify your window of opportunity, guys. And for a long trade, it goes from the highest point of support to the lowest point of support inside of favorable large triggers. It's a window. It's a range where the market is most likely to continue. These favorable large triggers are screaming up. So as the market pulls back, they come up. They're going to swallow anything a tick or two outside of them. So your window of opportunity goes from this mid band to these yellow one-to-ones. That's your window. You're going to activate your limit order at the area closest to price. Thank you, whoever gave me that one. At the area, the line inside of favorable large triggers closest to price because of the momentum on the large chart, guys. Because there's a clear path on the large chart, we're not anticipating a deep push, and we don't want to trip over pennies so that we can save a couple dollars. So you're going to right-click on your chart, and you're going to activate right at the top of that window. And that's where the market's most likely to continue. When the reversal bar prints, you're going to identify your areas that have been swallowed, enveloped by those favorable large triggers. This becomes the area where the market is likely to continue from the highest point to the lowest point inside of the triggers. Your limit order goes at the area closest to price because of the momentum on the large chart. The reversal bar prints, you search for your favorable large triggers and then the areas that fall within. In this case, It's nothing more than one mid band. Look how small the window is. Your limit order goes a tick or two below that mid band, and this is where the market is most likely to continue, guys. Window of opportunity is how you're going to reduce risk. Window of opportunity is how you're going to determine where the market is most likely to continue. And once you activate that limit order, once you've set that order right at the closest to price area inside of favorable large triggers, this is where you become powerless. This is where you've done everything that you can do. Guys, the only thing that the next-gen user is in charge of is whether or not his rules are met, whether or not the advantages are present. But what you've just done is you have identified momentum on a large chart through strong triggers. You have assured yourself that the path is clear because of no termination conditions. And now you have pinpointed where the market is likely to continue, and you've left a limit order simply waiting at the top of that window. And if price comes back to it, if that small crowd can push back to your area, you're now in a trade with all the advantages, guys. Give me a Y in the room if you're good. Reversal bar has me looking for favorable large triggers. There's my triggers from the top of the triggers to the bottom of the triggers. Favorable large triggers identifies where I look for areas. It's not the large triggers, it's the areas within. This midband is the area closest to price. Therefore, this is where my limit order goes. Guys, this is your bread and butter. This is the trade that typically wins 70 to 80% of the time. This is the trade that gives you the advantages. This is the trade that pinpoints where the market is likely to continue. And if price comes to that window of opportunity, you're in a long trade with all the advantages. But here's the part that scares new users. Don't get scared, guys. First of all, it's terrifying to buy the market when it's coming down against you. But I want you to remember your large chart has odds favorable momentum. Your large chart has nothing in the way. This is just a tiny little, it's a fluctuation in the overall picture. I was showing a guy that I work with yesterday a couple trades. He goes, you want the market to go up when it's coming down? And I said, yeah. He goes, well, how do you know it's going to stop? I said, I don't. I'm not in control of the market, but I trade with advantages. And guys, there it is right there. There's that advantage entry. I want you to be prepared that it may go to the bottom of the window. It's just an area. It's just a window. It may push to the bottom of the window, which means that you have to look at red numbers on your NinjaTrader. You have to look at the trade going against you. So you have to develop trust in the methodology. You have to study it. You have to research it. I want you to try to prove it wrong so that you get comfortable with that little bit of overrun. And then next gen users, really my favorite thing about what we do is you can manage your risk. You don't have to hope that it goes up and sit through this giant drawdown. We're going to put a protective stop outside of the window of opportunity. We're going to put a stop right where the market shouldn't go. And if this is one of those cases where a trade simply doesn't work and it goes beyond the window, we're going to exit. We're going to take a small loss and we're going to wait for the next setup. And guys, this is the part where I have to remind you. And I do this every morning, so you're going to hear it so many times, eventually you're going to believe it. Anything that wins 70 to 80% of the time is just through mathematical obligations going to lose 20 to 30% of the time. 20 to 30% of the time, guys, it's going to be a cost of doing business. The market is going to be wrong. It's going to hit that stop. And you're going to learn to be okay with this, guys. You're going to learn to take great trades that don't work. This is one of the reasons why posting in the room is such an important part of the process, because new users tend to get dejected through losses. They're like, oh my gosh, I lost, this sucks, and you rate your entire trading plan on one trade. Remember, we're looking at 10, 20 trades, and if you take 100 high probability trend trades, you're going to lose 20 to 30 of them. And you don't get to pick which 20 to 30 that you lose, so you have to be consistent. You have to learn the rules, and you have to learn them to the point to where you don't hesitate, where you enter that market when they're met. We manage our risk before we ever manage our profits, guys, but this is a trade that I don't miss. This is a trade that I don't hesitate, because this is a trade 70 to 80% of the time when the rules are met, this is my result, guys. Notice that it didn't go from the mid band where my order was. It went from the lower point of support. I had to watch it go against me 5 or 6 ticks. But because I waited for the pullback to the area inside, my risk was reduced. And then once the market moves in the direction of my trade, I reduce it even further below that reversal bar. Guys, I'm managing my risk before I manage my profits. Because you wait for the pullback, the distance to your target is its absolute greatest. You've increased your profit potential. This is your high probability trend trade. I want you guys to focus for your first 30 days with Nexgen on being able to pinpoint where the market is likely to continue and taking that entry. That's it. 20 days focused on entries, guys, is going to teach you to read your charts. You're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you will understand where the market is likely to stop. You will become a chart reader, and nobody can take that skill away from you. New users, actually, hell, even old users, when their limit order doesn't get hit and they see this tiny little fluctuation on the smaller, faster chart, they panic. And I see a lot of you guys getting in at the top of this bar. Oh my gosh, it's going without me. Only to have it come back. Guys, this is what we call the fear of missing out. Everybody's heard of FOMO, right? The fear of missing out causes investors to make bad decisions based on emotion. That includes jumping into the market, which never assures you a win. All it does is it makes sure that you have a smaller loss or a larger loss if this is one of those trades that don't work. New users get a little worried about buying on the way down, and I see them getting in on the way up. Once again, all you've done is increased your risk and decreased your profit potential. New users worry about small triggers turning against them, forgetting that the large chart leads the way, that the large chart defines direction, momentum, and areas. Your small chart's nothing more than an entry chart. Without this little loss of momentum, it's probably not going to get to your entry. So guys, your job for the first 30 days is just study. Study these bars, study this momentum. I think Crude was putting on an absolute clinic today. I'm going to take everything off because I don't want you guys to get distracted. I only want to look at momentum in potential entries. Smalls are outside of the large. This is the beginning of that momentum phase. If I circle the tail, this isn't my trade, right? This is the large chart telling me that I've got some potential. There's my pullback to resistance inside of favorable large triggers. There's my high probability trend trade. And if I back it up this way, guys, this is how you can study. This is how you can see if you miss trades during the day. Circle the tail with all that momentum. This one didn't make it. This probably wasn't our trade. But that one came right back to it. And that was a pretty good look. And you can scroll back. How many opportunities were in the market? How many rules-based trades? Because the sellers couldn't push hard enough. That's it, Alan. That's the only reason. There's no magic. This one went right to it to the tick, didn't it? Right inside of those triggers. Why does the market push up? Because buyers fought the sellers. Why does the market push down? Because sellers pushed harder than the buyers. That's all it is. There's no magic. We don't control the ups and downs. We don't control anything other than the pattern recognition. But what we have found, Alinsky, is through 25 years of doing this, is that when my momentum looks like this, when my path is clear, on a smaller chart, guys, this is freight train to the downside. On a smaller, faster chart, there's always somebody that fights, guys. There's always somebody that fights. Fear and greed. Fear and greed moves the market. People that have more money than us move the market. There's always, it seems, this little push. And look where that little push results. Area of resistance inside of favorable large triggers. So, Alan, it's not the whys that we worry about. Trades lose all the time with odds favorable momentum. Why? Because somebody who isn't us made it happen. We're not in control of the market. The only thing that we're in control of is whether or not our rules met. So guys, give me a Y in the room if you see that the rules were met. And you guys want to see how we find that entry? Let's get the cheater off. Let's go through the whole process of finding a trade. So we start with the trend. When I open up my charts, when I look at it, I say to myself, what direction is the market trending, guys? The most current bar. Am I looking for long trades or short trades? Am I buying or selling with this red background? What do you think? Guys, this is where playing along yields huge dividends because you're forcing your brain to recognize. All right, so the next thing that I look for if I'm in a down trade, if I'm looking for a short trade, do I have odds favorable momentum? Do I have a market that's likely to continue in the direction of the trade? Are my PFI says yes, A says yes, Mulu, Daniel, guys, that is 1/3 of the equation. The next part is I'm looking at the most current bar. And let me show you what I'm doing. Has this bar reached an area of support? Has it reached yellow 1-to-1s? Has it reached a divergence low? No, therefore the path is clear. Clear path, guys, smooth sailing, nothing in the way. So if I have a downtrend, I have odds favorable momentum, and I have a clear path, now it's okay to look at this chart. The large chart led the way. The small chart's going to pinpoint where the market is most likely to continue. Everything is trending down. My large triggers are down. My synthetic triggers are down. My price bars are down. Everything says down. So when you take the screenshot, Lex, are you using Capture? I feel like I'm yelling. Sorry. Cool. So let me show you. When you take the screenshot, did you close it out and now you're looking for it to share? Okay, cool. So rather than closing it out, where on earth did my screencast go? Or TechSmith Capture. All right, my TechSmith Capture, guys, let me do a quick little thing real quick. And this is hugely important, so I want to make sure that we do this. Sorry for the black screen. But on my computer, if TechSmith Capture is open and then closed, I can't get it back without killing it from the background. So I'm doing this real quick. Okay, so you opened it again. So take your picture, Lex. The supervillain. Mine's coming up right now. And guys, I love your names. I love the avatar names. So I capture the picture, right? And I annotate my chart. Well, this captures the image. Everything's up. And I say, hey, Mark, check it out. I have odds favorable momentum. I have no termination conditions. I'm in a downtrend. Now I'm looking for an entry. And now you want to get it in the class. Click copy. And when you click copy, it's going to put it onto your clipboard and then come over to the chat box and paste. If you're in the pop-out window, guys, you have to use Control V to paste in the window. It won't let you right-click and paste. And then Lex, it's when you upload as well, you click that upload button, that's when it gives you the link. That's when it gives you the link to screencast. And you can copy that link and you can drop that in the room as well. So the key is going to be, don't just close it out. Go ahead and share it once you're done annotating it, and it'll get it right into the room. Let's find an entry, guys. Everything says down. The triggers are down. The trend is down. The momentum is down. The path is clear. And I'm looking at the smaller, faster chart, and I'm getting a sick feeling in my stomach because the market's going without me. And I'm like, oh, it's going. What am I going to do? And this is where a lot of you just jump in, right? Bottom right-hand corner, Lex, there is the word copy. Right there. Bottom right-hand corner. And then, guys, also, straight from the tutorial page, you can go to the software user guide. And guys, these are called instructions. These came with the grill that you tried to put together without them that had extra parts, that IKEA desk that has 4 screws that you can't figure out where they go. These are instructions, guys. I avoid these like the plague, but that'll help you walk you through it. Everything says down, and new users are getting nervous. They're like, but Mark, it's going without me. How do I get paid? And it's still going. And it's still going. Oh my gosh. And then you get a reversal bar. And when you get a reversal bar, guys, that small crowd, that little group of people fighting everything that says the market's going down, they're given the pushback. And at the time of the pushback, you guys only have to do this. Look at your triggers. Where's the top of the triggers? Where's the bottom of the triggers? Remember, the triggers are coming down fast as that market retraces up, which means that these one-to-ones, it means that this Fibonacci resistance, it means that they're going to be swallowed up. So Nexgen users, you're going to take a limit order, and just below that lowest point of resistance, that point of resistance closest to price, that's your limit order. That's your entry for this high probability trend trade. It's because Lex, point 1, point 2 is a crude oil trade. There are 10 ticks for every point. The S&P has 4 ticks for every point, which means that it's going to count it in quarters. Different markets. You're welcome. Guys, the market's pushing up. Your limit order's waiting. The triggers are still coming down. You're hoping that it gets you. And now you're in a trade at 90.78. Guys, this is your first 20 days. Pinpoint the area where the market is most likely to continue, those areas of resistance inside. Look at how small that window of opportunity is, guys. And there's your reversal bar. Your risk on this trade initially is 12 to 14 ticks. When the reversal bar prints, you are literally risking 4 points or 4 ticks, $40 on this crude oil trade. David, do me a favor. Don't tell me that crude's violating the rules. Show me a picture with your rules written on it and where it's violating, and we'll talk about it. Does that make sense? Rather than just saying it's not doing what I want it to do, show me. Let's see. Maybe it is. I had a gentleman tell me that there were no trades to find in the markets and that I was crazy and I was full of crap. And then we simplified it down to 3 rules. And it's amazing how many trades he found and how many times the rules weren't violated. Do you have it open on your computer? That's the first part. Okay, so let's do it together, man. I'm going to put my indicators back on because I love indicators. I like fibs. But it happened again. All right, so David, I just want you to do it with me, okay? Whoops. So let me get rid of that. So when I click on the big red button, and this is the most important thing to me, guys, that you can take pictures. So we'll do this 1,000 times. When I click on the big red button, if I hover over just one chart, whether it's my large chart or my small chart, it's only going to give me that chart. But remember that we're 2 chart traders, right? We have a large chart and a small chart. So David, I want you to come up to the upper left-hand corner, and I want you to mash down your left mouse button and hold it down. It's a click and drag tool, everybody. So I'm going to drag all the way to the bottom right, and those crosshairs are going to capture everything that I need to see. The timestamps, the large chart, the small chart, the prices. And then when I release, that's what takes the picture. Releasing the mouse captures the area, and your capture software is going to give you this picture of a camera. This is how it actually takes the picture. So when I click the camera icon, it creates the image preview. That's okay. We're going to do the whole thing, brother. So you've got the picture, right? So you're halfway there. I'm not saying you do this, David, but my wife absolutely loves to read the first sentence of instructions and then assume that she knows the rest of it. So let's go to the second half. At the top of your image preview, there's an arrow, there's a call out, there's a shape, there's a highlight. These are the tools to draw. So that shape, David, take that square, click and drag. Click and drag. Show me what you're doing where you're doing it, right? You can take the arrow and go, ooh, Mark, is this a termination condition, right? Or, hey, Mark, are we coming from a termination condition? And then the call out is click and drag as well, David. So you're going to left click and drag down, and that's what's going to create the box. And man, just tell me what's going on in your life, right? Tell me what you see, why you did what you did, where you got in. But guys, the best thing that you can do is write your rules on the chart. Write your rules. What did it take to get you in? Because what you're doing is you're associating the words of your rules with the picture on the chart. You're creating recognition through the repetition, and you're verifying and validating that what you're doing does in fact follow the rules. So if you are forced to write entries come from an area inside of favorable large triggers, and then you find yourself taking trades that aren't, what you're doing is you're really reinforcing the rules, right? You're reinforcing what it is that you're seeing. If you're writing no termination condition should be present, and you write it on a chart but you trade it into it, then you can police yourself. Oh my gosh, I'm breaking my rules. And guys, I'm going to give you the rules right now. I'm going to give you a high probability trend trade checklist. I want every one of you to print this out and put it on your desktop. I want you to remind yourself that this is what it takes to enter a trade. These are the conditions. Is the market coming from a good top or bottom? And guys, your homework this weekend, new users, is to watch the video on this spreadsheet that talks about good tops and bottoms. And I want you to remember that you can take a trade without a good top or bottom, but that's where you're going to incorporate that three divergence rule. If three divergence is print, you're going to have to manage out of the trade. Chart reading. Do you have odds favorable? Are there no terminations, areas inside? Guys, I've never had anybody mark yes, truthfully, to this chart and do worse than 75% trades ever in the history of this checklist. And people that tell me that they can't win, I tell them, okay, stick to this checklist. Whoops. Do me a favor, give me 5 days with nothing but high probability trend trades and let me know what your results are. If you're one of the people in the room that I've asked to do this, did you make it the whole 5 days? Most people don't. Most people would rather be busy than profitable. Most people would rather be first than full of advantages. Guys, I've never had anybody stick to this plan and do worse than 70%. So there's your high probability trend trade checklist, guys. Steal it, take it, print it out. Here's the exact same checklist with pictures of what each rule means visually. This is for those of us that are visual learners. You should review this every morning because if your first 20 days is nothing but entries, don't you want to see exactly what they look like? And then finally, this is for my new users, guys. Every successful trader that I know has a plan. Not just a plan in their head, not just an idea of what they're going to do. Every successful trader that I know has a concrete plan for entry. They have a concrete plan for exit. And the most successful traders that I know don't deviate from their plans. So this plan is a stepping stone, guys. This is what we call the KISS plan. This is the Keep It Simple Sunshine plan. This is a stepping stone in your learning journey, guys. This is the beginning of the journey, and it's designed to optimize your chances of success with a high probability trend trade in one of those 50-50 trades. And Alinsky, if you were following this plan, you would have never taken that trade that you just posted, and we'll talk about why. This is a stepping stone, guys. It's through your simulation, through your study, through the class feedback from participating in the room, in your continuous practice, you're going to create a plan that's tailored to your personal goals based on your experience reading the indicators. The better you become at reading charts, Give me 1 second, David, and I'll answer that. Giving your experience reading the indicators, based on your chart reading, guys, you're probably going to change this plan. You're going to suit it to your needs. And David, your early confusion is you can't tell the time frame of entry. Is it 2 minutes, 5 minutes, 30 minutes? And David, you have experience in the markets, right? You've been a trader before, I'm assuming. Cool. So David, what you've done, and I like this because this is so common. What you've done, David, is you've taken everything that you know, and you can't figure out why Nexgen doesn't jive with it. You can't figure out why what we're doing is something different because your brain is still holding on to that ex-girlfriend when you're walking down with a new girlfriend, right? You're holding hands with Susie, but you're still thinking about Linda. Totally normal. Good. This is a better one. So here's the best, David. You have a large chart and you have a small chart, and it doesn't matter what the time frame is. It doesn't matter what it is, but I can tell you that your large chart is what we call a 13-2 chart. And that's just the bar structure. That's the dynamic Renko bar structure, and I'm not going to lie, I don't even know what it means. But what I do know is that my large chart, my chart on the left, David, no matter what it is, it leads the way. It's going to define direction, momentum, and areas. And I'm going to allow it to do that. And I'm going to make sure that my first two rules, the rule of momentum and clear path, are true on a large chart, no matter what that chart is. Because if you're a NASDAQ trader, it's not a 13-2, it's a 34-5. And then my small chart, no matter what the time frame is, and I'm going to tell you, John Novak built you workspaces so you don't have to worry about it. My small chart is nothing more than an entry chart. It doesn't matter if it's 2 minutes, 5 minutes, 30 minutes, right? No, there is no, David, there is no, how long should a trade take, right? How much is a bag of groceries? I don't know. It depends on the groceries. David, your trade, I love that you posted this because this makes sense. Your trade, watch this. Da, 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 let me go to a chart. Your trade, David, will take however long it takes from your entry to your target. Your trade will take however long it takes to either go from your entry to Fibonacci support, which was 5 minutes in this case, or until your exit conditions were true, which may take a minute. It may take 8 seconds, right? So don't put the pressure on yourself of determining how long it should take to take a trade. If you took this long trade at the bottom, if this was your entry, from 9:19, it hits Fibonacci resistance at 9:26, 7 minutes. You don't have to know, David. All you have to know is that if this is your entry, absolutely nothing changed until you hit your target. So however long this takes is how long it takes. Um, Lex Luthor, how many contracts are you trying to trade? So let's answer that question first. One, are you trying to trade on a live account, or are you trying to trade on Apex? Or are you just on simulator? And it won't let you trade. That's odd. Let me think. Maximum order quantity was met. I've never actually seen that before. Guys, does anyone in the room have experience with that? Demo, your maximum order quantity has been met. Your pictures are real blurry. Please change your quantity. So do me a favor. Lex, open up your chart trader and tell me what the quantity is here. Let's see if that gives us a little insight. Yeah, and that shouldn't happen unless you've blown out $100,000 on Sim, in which case we'll just reset it. But what's your quantity? as you try to get into the market here. I can't see it in the picture, it's hidden. So on NinjaTrader 8, you have to go up to your Chart Trader button and click on Chart Trader. It'll open that up. Let me know what that is. But David, don't put the pressure of having to know how long a trade is going to last on yourself. You'll never know. You'll never know how long it's going to last. Trades go right until they're done. Sometimes it's 15 seconds and sometimes it's 15 minutes. And we do that, right? So make it a little bit wider, Lex. Stretch it out a little bit further, and you should be able to see it. If this is too tight, it won't show it. Make sure that you're on your demo account. And that may have something to do with it as well if you're not on the demo account. If you want to take another picture of it, maybe a smaller picture, your stuff's coming through real blurry, we'll get you fixed, man. We'll do it as a collective here too. Let me get back to the KISS plan, to the simple plan, guys. This is not the end of the world for you. This is just the beginning. This is the one that as you study is designed to keep you safe, to optimize your success, guys. And it starts with great entries. Right here, Lex, stretch to the right. So you're going to see a left-right arrow when you hover right over the edge. Stretch it to the left just a little bit and see if we can't open up that box a little. Like that one's open just a little bit. Great entries. And guys, I'm putting everything else on the back burner until I finish this one. Great entries, guys. Rules-based, mechanical, methodical entries. That's your first 20 days. Your first 20 days is finding the absolute best of the best and making sure that you can get into the market at the appropriate spot. And then Lex, also, dude, this is always an option. Jason and Tech, it shows you a quantity of 1,011. There you go. So drop that down to 1. Nice. Fixed it. I knew that we could. Great entries create manageable trades, guys. Great entries, mechanical entries, methodical entries, pragmatic entries, rules-based entries create manageable trades. And the high probability trend trade is your best of the best in the beginning. And when you enter your management, you got to do something with that great entry, guys. So your management plan starts with great entries. Your management plan starts with an entry at an area inside of favorable large triggers. Your stop will go outside of the window of opportunity where the market shouldn't go. And at this point, there's nothing for you to do. You took the perfect entry. You have all three advantages. Your stop is where the market shouldn't go. Guys, either your stop is going to get hit or it's not, right? Small losses are a normal part of a positive equity curve. So it's either going to hit your stop and you'll wait for the next trade, or it's going to give you a reversal bar. And if it gives you a reversal bar, we're going to reduce our risk to 2 ticks above that reversal bar. There's no opinion. It's if then, 100%. If I get a reversal bar, then I reduce my risk. Not if I feel scared, I reduce my risk. If I'm nervous about the trade, I reduce my risk. If I see a fluctuation in price that might take me out of a trade, I reduce my risk. Guys, let it be pragmatic and mechanical. And at this point, there's nothing to do. Either your closer stop gets hit or it goes to your first target. And your first target, brand new users in the KISS plan, it's $100. It's a measly little $100. It's a nice steak and a glass of wine. That's all it is. But $100 creates confidence through the memory of success. $100 creates a dopamine rush. $100 is $100 that they can't take from you. And you're going to move your stop to break even. So not only did you get paid, but you also have zero risk on the trade. And guys, I want you to, this is done because new users forget that the large chart leads the way, that the large chart gave you momentum, that the large chart gave you a clear path. And the small chart was nothing more than a means to enter, to take advantage of the advantages. So there's nothing to do. You're either hit break even, you've already been paid, or it hits your second target. Having zero risk on a trade and money in your pocket makes it easier for the new user to embrace the idea that the large chart leads the way, and it makes it easier to hold for the second target. And you're either going to get stopped out break even, which is going to happen a lot in the beginning while you learn to read your indicators, or it's going to hit your second target, guys. And your second target's only $200 off in the distance, which means that on a 2 contract trade, you made 200 on the second, you made 100 on the first, which means you're $300 richer, guys. And you're out of the trade and you're waiting. You're simply waiting to see for your rules to be met again, guys. And $300, I do the math all the time because people think they have to hit home runs all day. $300 a day, if that's all you made a day, is $1,500 a week. Guys, that's not a bad week. And that's a $6,000 month, which is a pretty decent month. And that's a $72,000 year, guys. And here's the beauty of it. That same crappy little $300, I'm just kidding, there's nothing crappy about $300 at all. When you turn that 2 lot into a 4 lot because you've been making consistent profits, your $72,000 year suddenly becomes a $144,000 year from the exact same trade and the exact same management plan. And then that just continues to go up. As you add contracts, it just goes up through contracts, not through more trades, guys. And that's kind of what I want you guys to embrace, that you don't need all the trades. You don't need every move in the market to get paid. What you really need is the best moves. And when you take the best moves, when you get into the market with all of the advantages, it creates manageable trades, guys. And then your experience with the indicators, your experience with your chart reading is going to begin to give you an indication of when it's okay to hold for bigger moves, to turn that $200 profit into $500, $300, right? Your chart reading is going to allow you to manage so that you're going to know when you shouldn't be taking that next trade. Appreciate that, Lex. And the more you fill your spreadsheet, guys, the more you're going to see this happen every day. Patterns repeat themselves every day in the market. Here's a picture. I don't even know when it was from. Oh, that's just a high probability trend trade. That's not the one that I wanted to click on. Watch this. Here's the vacuum. What's the vacuum? It's the gap theory. That's the wrong picture in there. I messed up my links. I have to fix that. Now, David, it's just repetition. But in my spreadsheet, here's price hitting a mid band, and here's the large triggers a full bar away. This is that reminder. This is me taking pictures of the patterns that happen in the market that I don't want to take a long trade yet. I want to wait to see if it closes the gap. And guys, you're reinforcing this every day through repetition. When you open up your large chart and you just scroll back, here's a mid-band hit with the large triggers a full bar away. D-Rock, you didn't go short here, did you? Not after yesterday. Guys, it's likely to close that gap. So we know not to take that trade. Here it is hitting a mid-band in support. The large triggers are a full bar away. The pattern repeats itself. Let's see if it does it again. Here it is hitting resistance, and the large triggers are a full bar away. The pattern repeats itself again, over and over. So guys, what you're going to find is that the market does the same darn thing every day. The market creates the same patterns every day. It goes up, it goes down, it pulls back to areas inside of favorable large triggers. All you have to do is realize, and David, you're brand new, right? I'm going to give you my wife's favorite word, and it makes her smile every time I say it. Give yourself some grace, guys. Allow yourself to be new. Give yourself permission to suck for a week, right? Because at the end of the week, you're like, oh my gosh, I can't believe I'm reading these indicators. I can't believe I just nailed that entry. And it gets better every week. It really does. You guys that started on Monday, do I have anybody that started on Monday in here? Monday or Tuesday? Lex, you've been with me, what, 3 or 4 days now? Manpreet, you've been with me for 3 or 4 days now? Is it easier today than it was? Yes, you can, Chris, as long as you need to, brother. It's easier today than it was at the beginning, right? It was like reading Chinese and you don't read Chinese on day one. It's like drinking from a fire hose. And I'm telling you guys, this path forward never stops, especially if you post in the room and especially if you ask questions. So allow it to be simple. Allow simplicity to rule everything that you do. And focus on your entries, guys. Give me 20 days of focusing on entries. I'm not going anywhere. We're going to work together on your management plan. We're going to work together on those next trades. Here's that 50-50 trade, that one area not broken. Alinsky, I want you to look at the trade that you posted, and I want you to check out the rules for your best chance of success on a 50-50, and let me know if you can police yourself into a little observation that might have kept you out of that loser. When an area is not broken, because that's my goal, guys. My goal is that you can police yourself through rules ultimately. But until you're capable, I'm going to help police you. Here's one of those areas with the potential to break trades, guys. 50% of my triggers are through and 50% are not. This area, these blue fibs might break, but they might not. I don't know. Guys, give me a Y in the room if you realize that you have absolutely no mention of fib color in your rules. You have absolutely no mention of mid-band color in your rules. I want you guys to realize that because these are two of the most common things people try to add in. But market turned red, that means it's resistance. Dude, price is above it, it's support. Don't complicate things. This is an area with the potential to break, which means that my money is worth the perfect entry on the smaller, faster chart, guys. When I don't have a clear path, I will absolutely, positively insist on no divergence on the small chart. I will insist on strong triggers, and I will insist on a small window of opportunity, because why on earth am I going to put the maximum amount of risk on a trade that only might break an area? Does that make sense? It's not a high probability trend trade. And guys, reactions happen at fibs. So I say to myself, my large chart better be screaming in the direction of the trade. My small chart better be screaming in the direction of the trade. And here's the one that gets us, guys. No divergence on the 5-1, no loss of momentum. And if it happens, I have a no and I'm not taking the trade. And here's a bigger advantage coming from a good top or bottom from a termination. And if it's a no, I'm not taking the trade as a new user until I get some reps in and I get some pattern recognition. And then here's the reminder for new users. Divergence, no trade. It's not worth it. It's not worth sacrificing your hard-earned money on such a maybe situation. And then Alinsky said it looked good, right? Let me show you guys the magic of the classroom. So Alinsky, the trend is up, right? Heck yeah. The momentum is up, isn't it? Egads and little fishes, what a great look. Alinsky, what do you suppose happened right there when price reached Fibonacci resistance and none of the triggers broke through? Which rule wasn't met? Termination conditions, right? So let me change your line of thinking a little bit, Alinsky. Instead of saying looking good, I want you to do this. I want you to type out OFM, odds favorable momentum, and I want you to give it a giant. Why? Because you know you have that advantage. And then I want you to put no terms because it's a requirement. And you have to put a giant in, right? You're forced to go through the process of understanding what a termination condition is. And you may not catch this in the moment because you're brand new, and that's totally cool. And I want you to post this picture. But do you see how looking good turned into rules not met? And if it's rules not met on the large chart, Alinsky, then you don't even look at the small chart, which means what you just did is you saved yourself the money that you just lost, which means that the money that you win on the great trades goes further. And guys, this is why we post in the room. That's your first loss. That's awesome. Losses happen, right? And trading isn't about the one trade, guys. Trading is about the accumulation of trades, right? So you're 7-1 or 8-1 right now. You're shooting close to 90%. That's amazing, right? You suppose you could make a living as a trader on 90%? And Alinsky, I know that you have experience as well, right? So isn't that little addition priceless to know where the market might do that as someone with experience? That's what most. It started printing here. It started printing right at the update there. So what happens a lot is that conditions change, but we get so married to a direction, we get so married to a look that we forget to kind of put it all together. I know I'm very guilty of that. I'm very guilty of saying when price reaches here, I'm going long. And I said that somewhere over here, right? And I completely missed the idea that it hit a fib. And then Alinsky, the other side of that is there's that 50-50 look and it didn't reach the fib yet. That was your entry, my friend. That was the one before it hit the fib that takes you all the way up to the fib. Does that make sense? Just above this midband, right at the large triggers, that was your money. And right here is where the party was over. And this is why we go through repetition. This is why we go through it over and over again. And I love that you did that. I love that you wanted it inside of the large triggers because that's what the rules say, right? And Alinsky, you're going to get to a point to realize that a couple ticks is worth the risk with this much momentum coming from a good. So that's perfect. But it's areas inside, and this one was close. And if you didn't take it, great job following rules. But what I'm telling you is the better you get and more familiar you get with these charts, you might take this trade and manage accordingly to get up to that fib. I was trying to remember who said that. I actually woke up today and giggled about it a little bit. So guys, this is why we post in the room. Because every post turns into a private session for you. Every post turns into feedback for you. Every post is designed to recognize advantages and disadvantages, to celebrate victories, and to identify areas that may create challenges for you. So I'm going to encourage you guys, embrace the simple trading plan, right? Give yourself the best chance of success. Create some confidence through the memory of success. Believe in the idea that if price reaches Fibonacci support and the trigger lines haven't made it through, look at the reaction. Let's circle what's happened in these two bars. Look at all of that indecision on the smaller, faster chart. This is why the large chart leads the way, guys. Because Fibonacci areas are the point where the people that control the market are going to react, where the buyers and sellers are going to fight. What else do I notice? 3 divergences in the same price range right there at Fibonacci support, kind of confirming that this is a trouble spot. And guys, that's our first half of class. This is the first half of class every day of every week. So if you're brand new and you're thinking, holy smokes, this is too much, I'm going to say the same darn thing on Monday, Tuesday, Wednesday, Thursday, Friday, and it's going to get easier every day. And if you ask anybody that's been with me for a month, it's almost as though the market slows down. It's almost as though the decisions begin to happen before it's even time to make the decision. And you'll do it this fast. Trend is up, triggers aren't odds favorable, the path is clear. Instantly. I do have an area right here inside of favorable large triggers. This would be a medium probability trade if I chose to take the long. And I resort back to my advantages. I don't have the advantage of momentum, but I do have a clear path in an area. Could I take this trade and manage it assertively, understanding that I'm getting into it without the advantage of momentum? Does chart reading give me the ability to say, I'll take this for a small risk to see if this market that's in an uptrend continues off to the next key area? Because right now the buyer's in control off of support. And that's the next phase, guys, is you're going to find more and more trades. More and more trades. If you need them, if you want them, but guys, you don't have to have them if you just focus on the best of the best and you're a little bit patient. I've literally taken 6 trades this week. Literally taken 6 trades this week. I have exceeded my goal every day. And I'm telling you, by focusing again on that KISS plan, it's really made my life easy. Because I'm human like the rest of you guys, and I can jack it up with the best of them on days when I'm feeling a little antsy, feeling a little opinionated. So NASDAQ's going up, has a clear path. The S&P has odds favorable, 50-50. Oh man, Jose, enjoy. Enjoy, enjoy. We'll see you in a couple weeks, man. Have fun. Are you doing anything cool? I hope. Odds favorable, 50-50 on the 1-to-1s. I have a loss of momentum on my smaller, faster chart. Guys, if you're a KISS plan trader, this isn't your trade. If one divergence doesn't deter you because it's coming from a good bottom, there's your areas inside of favorable large triggers, guys. There's your highest point of support to the lowest point of support inside of favorable large triggers. Can you give me a Y in the room if you see how quickly that happened? You may not do it that fast. Not if you're brand new, but you will. That's how quickly it happens. And here's the cool thing is before I ever enter the market, I know exactly where my risk is. I know exactly where if the market goes, I don't want to be in it. So not only can I identify a bounce point, I can also identify my stop. And then check it out. If it does work, I can identify where the market's likely to go with all this momentum. And that's kind of the plan, guys, is just building this foundation where the market shouldn't go, right, D-Rock? If it goes beyond all of this support, if it gets below these large triggers, do I want to be in the trade anymore? Hell no. I'm done at that point. My advantage is gone. I already don't have the advantage of a clear path. And I also have a little disadvantage of a loss of momentum. Which means if I'm willing to take this trade, I have to understand that advantages are going away. If I'm willing to take this trade, I have to understand that it's not high probability. But if I'm willing to take this trade, I have to manage my risk just as much as I manage my profit. So if I take this medium probability trade on an area that isn't broken, I already know that my first target is going to go at the trouble spot right here at these 1-to-1s where the market has the potential to stop. Isn't that cool? You know all of this before you ever enter a trade. Because you have concrete rules. You have a pragmatic approach to entry, a mechanical, methodical approach to entry, and you have a mechanical, methodical approach to management. Guys, if it goes down here, I don't want it because my path isn't clear. At 89.50, I don't have one on my small chart at 89.50. And I rebuilt and reset my database today, 100%. So one of us may be off. It may be because you have different days. It may be because you have a glitch in the matrix. Maybe I'm wrong because I keep changing things. But do you see how my risk is established? My entry's at the areas inside. Right now it's hanging out at the bottom of the window. I don't have a clear path. I had a loss of momentum, guys. If you are a high probability trend trader, this isn't your trade. If you are the KISS plan trader, this isn't your trade. As you grow with the software, you and only you can determine whether or not this suits your needs, whether or not this trade is something that you're willing to put risk on. And if it is, take it. And if it's not, don't. But this is a medium probability scenario. My first target's at 100. My second target's at 200. And if I get a reversal bar, I'm going to reverse my risk anymore. Mulu, we'll see you next week, man. Enjoy your weekend. Do you see how pragmatic it is? If I get a reversal bar, then I'll reduce my risk 2 ticks below. If it hits my first target, then I'll go break even. If divergence prints, maybe I'll exit the trade. Or maybe I won't even worry about it because I'm on simulator. I'll see what happens. But you guys see how I wasn't in control of anything other than the rules being met. Anything other than following my plan for entry. Anything other than following my plan for management. I have $100 of risk on this trade. I'm coming from a termination that created a full reversal. I have the best look of momentum ever, but I have an area that hasn't broken. I'm identifying advantages and disadvantages in the moment. I just made $100 that nobody can take from me, and I'm going break even. I'm going to politely ask you guys to give me a Y in the room if you're following just how calm I am when this is happening. If you're recognizing that I'm not making decisions based on fear, I'm making decisions based on a solid plan. And I've got $100 in the bank that nobody can take from me, and they just got me break even. Would anybody be upset if I handed you a $100 bill 5 times a day? Think about that. $500 a day. Can you imagine? $2,500 a week? What is that a month? That's 10 grand a month. Guys, that's a $120,000 a year from getting caught break even 5 times a day. I'm going to tell you right now that doesn't suck. All right, I'm going to take a break, guys. I'm going to go stretch my legs, and I'm going to mute the room. All right, guys, I'm back. As you learn to read your indicators, your plan may change. Guys, nothing ever changed on this trade, but I kept it mechanical and methodical. And when this happens as a brand new user, can everybody hear me okay? When this happens as a brand new user, this becomes a management opportunity, right? You know why you took the trade, you took the picture, you annotated it, and now what you can say is you can come back and every great entry becomes a management opportunity. Nothing changed against the trade. Makes sense to not go break even yet, right? So what this does is this becomes an opportunity for you to take these 100 trades and turn them into three, four, $500 trades, right? You'll get to the point to where you stop taking $100 profits and you'll take profits at the problem area. So this is kind of a good example of it. That was pragmatic. $100 totally cool. I'll take it all day long, but it becomes an opportunity for you to grow and make a little bit of money, right? And there's that problem area holding strong, but still nothing's changed. Small chart shows fluctuations. Large chart leads the way. All right, guys, I'm going to scroll up to the top of the room, and I'm going to start looking at your pictures, guys. I'm going to start looking at what you guys are doing. Um, I do have to scroll to the very top, which means that if you posted a picture and I'm looking at it and you ask a question in the room, it might take me just a second to get back to that picture. So don't freak out. I haven't forgotten you, and if it seems like I forgot you, remind me. Miss Debbie caught this yesterday, and let's look at it, guys. Everything says down. The triggers are down, the charts are down, the momentum's down, everything is down, and Miss Debbie enters on a pullback to resistance inside of favorable large triggers. She makes money. She makes money. And I can tell you guys right now, excuse me, that this trade looks like the last trade that she showed me. And the last trade that she showed me looked like the one before that, the one before that, the one before that. Because Miss Debbie has a plan. And she trades her plan, and she doesn't deviate. This is her recipe, and all of her trades look exactly the same. And Debbie, I would wager to say that that's why you're finding success. Why your trading has gotten so consistent. Because you do the same thing, because patterns repeat themselves every day, and you've learned how to take advantage of them. And guys, that's where every one of you should be trying to get to. Not catching all the trades, not being the smartest person in the room, but being the person that shows me the same darn trade every time. Snorri, the fib, divergence, strong bottom, odds favorable, pull back to support inside of favorable large triggers, money, money. Snorri, how easy was this one? I like to ask you guys, how easy was it? It was easy, right? I'm going to take your picture, Snorri, and I'm going to go to my spreadsheet because I'm not going to lie. I want to be able to do what you do. I want to be able to take trades the way you take trades. So I'm going to go back and study that tomorrow to make sure that I can do what you did. That's how the spreadsheet works, guys. You should all steal his picture. This is the picture perfect from the KISS plan 50-50 trade. It could not have been executed better. Nice work. And I'm gonna tell you guys, I'm kind of a dork. I get so excited when I see you successful. All right, let's see what we have here. Another 50-50 trade coming from that termination. No divergence, pull back to the area inside the favorable large triggers. Money at the trouble spot. And that third divergence prints, that's your exit condition. So Snorri, once again, how is it against your rules? Oh, only one small trigger through. Okay. That's so you broke a rule. I read that wrong. I thought it said only small triggers through, but only one small trigger through. So this turns into a chart read. And Snorri, this is one of those instances where when support holds and it hits resistance and the triggers can't follow and everything is screaming down, every chart agrees, no divergence, you played probabilities. The market's probably going to continue down with that look, with those patterns. You did it. It was low risk. You managed it beautifully. This is kind of like leading the passer in football, right? You looked just a few seconds beyond the now. It's a great read. It's a great trade. But does it fit the rules? And I love that you went back to that. You're like, I rocked it, but it broke my rules. So you know what your rules are, and you're focused on that adherence. But I hope that you also fully understand that your rules are going to grow as you grow. And that's such an important part of what we do, is making sure that you guys understand that you are not stuck in the same place. It's this constant state of growth. Let's see who's next. I'm not going to scroll down for questions for just a minute. We're going to get through a couple of them. Gene took a long. Odds favorable momentum. Is it? Right at the tail end. The path is clear. If no pivot stop out, move second target closer to the 13 fib. Locked in 9 ticks on second. All right. Gene, can we talk about terminology? Just a little bit. Definitely not odds favorable momentum. You are losing momentum drastically at this point. This is odds favorable. And this is just, guys, I'm going to go back and I'm going to point things out because it's a learning environment here. And I want everybody to get the lessons. This is odds favorable momentum. The only way I'm ever going to use that term is if I have a clear separation between the two. This is the tail end of momentum, right where that is. You did have a clear path. On the fib, not quite on the divergence line. So this is still in 50-50 range. And then you're using a range chart for entry. You've ditched the 5-1 gene, it looks like. But it's still a pullback to support inside a favorable large trigger. So you took a medium probability trade. You absolutely nailed the entry. You took quick profits and you weren't willing to give it all. I love the trade, Gene. But for the sake of class, I had to correct just a little bit of the terminology there. Darn teacher obligations, you know? Weak top, gap theory. So Snorri, let's go next level on this one. First let's start with, does everybody see price reached a mid-band, large triggers didn't follow? Price is likely to snap back and close that gap. Snorri knew that, didn't take a trade. So the second half of this is that from a weak top, a lot of times price likes to go up to that 91.55. It's never guaranteed, but it keeps you in a state of waiting to see what's going to happen. Is it going to continue back down? Is it going to go back up? There's always two options. That's a beautiful read on the gap theory, guys. If you're trying to study gap theory, steal his picture and understand that when price reaches the area and the large triggers don't follow, it's likely to snap back. PFI. That's a bad gateway. Let's try this again. PFI. Are you in here? What's the recipe for a good bottom? What's the recipe for a strong bottom? Do you remember? And I always ask, because you're only halfway there so far. Nope. So that's what creates the termination condition, right? So the termination condition is in full effect. You know not to go short. But you're still waiting for the reaction. So a strong top or bottom, PFI and everyone else, is when that termination condition creates a full reversal. So until it rolls, until the large triggers roll from green to red or red to green, in the moment here, you're only at a you're at a point for reaction. And the reaction was that big honking bar up, right? But what direction is the trend, PFI? And this is for everybody. It doesn't have to just be PFI. What direction is the trend? It's got to be the large chart. Large chart leads the way. The trend is still down. And guys, it's still momentum down as well. So PFI, when you have this termination condition here, what is that? S&P? Let me see if I can find it on the S&P. Let's see if we can get a lesson out of it. Okay, so that was it right there. Look at that. There's your reaction. See how it didn't give the reversal yet? And then it became a pivot stop out. Boom. Now it's a strong bottom. Let's see if there was any indication on the chart just from the bottom. I love your first hit was at 946. And at 946, look at the divergences. It really is a bottom. This confirms this termination condition, but in the moment, you're just waiting for the reaction. Reversal happens. And a lot of my momentum traders, when this termination here, they're taking a long trade all the way up. Is it cutting out for everybody or just Bobby? Little? Yes? Okay, hold on, guys. Let's do this. I just did a little reboot on my AirPods. Does that help? Is that better? If not, I can reboot the room. That is better? Okay. Does that make sense, PFI? And really for everybody, this was a termination condition without a doubt. So price reaches the divergence low, the triggers are above, it's a termination condition. And termination conditions create reactions, right? So let's scroll back to 946. And let's look at the reaction that this termination condition printed or created right there. There's your reaction. But everything is still down. The smalls are still below, the large are down strong, guys. This was the area for the fight. And then this is the fight that ensued. Once the termination condition, this was a term, and then it becomes a pivot stop out. Once it creates the full reversal, now I've got a strong bottom. Now I have the precursor for the best of the best. You'll see that happen on your smaller, faster chart. The triggers, if it's really going to be a bottom, these triggers have to roll. There's no way around it. Does that make sense, Alex? A termination condition is awesome. When it creates a full reversal, then it's a strong top or bottom. So the termination is awesome. When it creates a full reversal, it's a strong top or bottom. It was before, but that's not a high probability trend trade, is it? That's a trade that people that have this desire to be first take. I don't take that trade. I wait for odds favorable momentum. I wait for a clear path. But there are people that take it. And they do it because the small chart is showing the roll, because the small chart's telling them that the termination condition is probably going to hold. So it creates opportunity. Strong triggers, everything's up. There's your third divergence in the same area. And it was a good bottom because it was a termination that creates the full reversal. That's what creates the good bottom. Yeah, you're welcome. Great questions. You guys recognize three divergences in the same price range on your smaller, faster chart? We know that's a termination condition. Maybe that's going to kill the chances of success on a trend trade. Maybe it won't. I don't know. Great lesson, though. And then Debbie looks exactly like the last one, doesn't it? Everything says down, so she went short and got paid once again. Nice job. Safia, 50-50. I have to disagree. Let me look. 49.35, 49.35. You're getting it up here on the momentum from the termination momentum. So look at the pullback. No divergence, strong triggers, strong triggers. Guys, this is a momentum trade with flawless execution. That's not a new user trade. That's a, hey, guess what, Mark? I'm going to study my butt off and learn how to master this trade. And that's exactly what you did, Safia. And you nailed it beautifully. Gary, everything says up. So you go long. NASDAQ, you fought the small triggers. They act as resistance. And then you wait for everything to agree. And the market continues up with all that momentum. Nice job, Gary. And then Lex, let's see what you got, man. And Lex, we're comfortable with annotation now, right? Let me get down to where I can see you guys. If I'm going to ask you questions, I should be able to. Yeah, no, Safia, you rocked out on that one. I was looking in the wrong spot. It hadn't reached it yet. That's okay. So let's annotate together. What do you say? I love annotation, guys. I'm telling you, annotation is the key to success. Annotation is going to get you focused on the best of the best. So the trend is down. I love it. I'll just put an arrow. This is a termination that created a full reversal. This is a strong top. Man, that font's just a little bit big. There's my strong top. What do you think, Lex? Odds favorable momentum? Absolutely, right? And here's where you beat the system, my friend. The small triggers are through the area, right? Small triggers broke through. It has the potential to break. And you didn't reach the next area. You threaded the needle, Lex. Small triggers broke this fib. Price didn't reach this fib. Your entry is at that mid band inside of favorable large triggers. That's the only thing that I can pick on you a little bit about. My entry was as price came back to the mid band inside of favorable large trigs. Does that make sense? Rule number 3. Your window of opportunity is right about there. You just got in on the other side of it. Your first shot when you're trying to get into areas that break or that have the potential to break, your first shot is always your most manageable shot. Oh, and it's going to take you. You've been here for 3 days, Lex. What the hell are you doing? Come on. Greatest criminal mind ever, my eye. No, I dig it though. Man, that's a great read. You're 3 days in, and this is a great read. I can't wait to see what you're doing next week. But do me a favor. Vandalize that chart, man. Tag it up. Let me know what you're thinking, what you're seeing, because all you're doing is reinforcing the rules. All you're doing is creating better recognition every time you write on that chart. So Keep doing it, man. Guys, this is the path. You Mandalorian fans, this is the way. Entry above this tail. All right, who was this? David? David, will you do me a favor, my friend? And I know that we're going through it right now. On your right chart, are you in here, David? Boop, 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 boop. Did we lose them? Guys, do me a favor. If you can't see the text where you get in, if you can't see the markers where you get in, do me a favor. Right click on your chart and go to Data Series. Scroll all the way to the bottom to where it says Plot Executions and get me those texts and markers. Um, and let me show you why. And David, I'm sorry, you're getting put on the spot on this one. You said that you entered above this tail. Your entry was at 9,100, which means that your entry was either right here or right here. And I don't know which one it was, right? Was it the entry that trades directly into all the termination conditions, or was it the 50-50 trade? And then the target was based on the recently hit, but you've got a big trouble spot at 91.33. David, it's a solid look for a 50-50 trade. Two divergences would keep me out of this trade personally because my large triggers never broke. Um, at 91 flat, there are no areas inside of favorable large triggers. So we're forfeiting advantages. Areas that we hope break, right? Trading not from areas at all and potentially into areas. So while I'll recognize that it's a termination that creates a full reversal, and that's an awesome look, there's still a lot of challenges going on. And I always try to nudge you guys away from challenges, especially as new users, because the more you have to fight, the more difficult it becomes to win that fight. Awesome posting. Gene, you took a short. Everything says down, the momentum is strong, the top is good, the pullback is solid, and Gene says, you know what, I think I'm just going to go ahead and make some money today. Nice job, Gene. I like it, I like it. D-Rock, 50-50, two divergences. You take the first one with one divergence, because the first shot on a medium probability trade is always your best shot. And then D-Rock, two divergences on a 50-50. How do you feel about that? A little bit of greed got in, right? Not okay. The area hasn't broken, right? Two areas haven't broken. I love your entry. I love your first target. But two divergences on a 50-50, and the large triggers are way down here, man, it's likely to just mess up. It's likely to not win at that point. You're giving away too many advantages. Does that make sense? You've given away the advantage of a clear path. At entry, I love your entry. I said that. It's when you got a second divergence and you hoped that it would still go up. Rather than saying two divergences on a 50-50, man, that's a deal breaker for me. Yeah, just hit close. I love your first entry. It was manageable. You had virtually no risk on it, right? Make a little money. And then once you get this pivot stop out with a second divergence, you're going to know it about right here. There's just no reason to lose money or go break even on that one. You could have pulled a little cash out of the market on it. And that's one of those things. In the moment, this is awesome. You would have made the 300 if you just would have taken it. But you're a week in, so it's time to modify, right? Because you're reading charts like a boss, dude. You're reading charts awesome, and you're starting to challenge yourself a little bit with bigger stuff. That's okay. But you're not reading them so fast that you recognize two divergence as a deal breaker on a 50-50. So make sure that you reinforce those rules a little bit. Go back, re-annotate the chart. Write that two divergences on a 50-50. Just, it spoils the party so often. I like keeping you guys safe the best I can while you learn to read your indicators. All right, Lex Luthor. Oh, I think that was just trying to figure it out stuff, right? Which means that I missed this one, D-Rock, and I apologize. Odds favorable momentum, strong top, 50-50. A little more risk with strong triggers, even though it nicked above and it got you. So, D-Rock, what's the one thing that we missed here? And guys, everybody's allowed to answer it. You traded into a termination condition, right? So it makes sense that this fib is going to create a reaction. And it did. And that reaction was just a little bit beyond your window of opportunity. And they got you. But that has a lot to do with it. This much momentum from a strong top usually retests, but you don't know what the reaction is going to be. And it just took you outside of your window of opportunity. And it clipped you darn near high tick. And that's just an unfortunate circumstance. You made a choice into the fib. And I think that that's what I wanted to point out, though, is that it's not a 50-50. You were still married to this fib, and you didn't notice that it had hit this fib. Does that make sense? Because I've done that. Oh, my path is clear, and I start looking for my entry, and I forget that 43, 77, 71 is sitting right there to mess up my party, and it tapped it to the tick, man. Still great reads. If I see a third divergence and my target's not hit, I do, because three divergences can end a trend. I'm not about taking chances, guys. I'm really not. My brother thinks it's hilarious. I'm the most conservative trader that you'll ever meet, guys. I respect termination conditions. Like for me, D-Rock, I would never even enter this trade. But that's just me. It doesn't have to be you, right? I know a lot of people that find great success with these trades. It just it gives me heartburn. I can't do it because I see these things stop the market way too much. So for me, I understand that losing is a part of the deal. I still hate losing. So I give myself the best chance of success every time I take a trade. That's always kind of my goal is to embrace advantages wholeheartedly. You're welcome. And it's funny because my brother and I read charts exactly the same, but we have very different pain tolerances. PFI working those momentums, right? Termination condition creates a full reversal. Darn right, it's a good bottom. And look at that. You took the one that we pointed out. Not gap theory, dude. We don't play gap theory on the small chart PFI. Gap theory is a large chart thing. What you had was a no divergence, pull back, triggers up. Everything says up, breaks the area, snaps back. You're taking advantage of the good bottom and the immediate momentum. Dude, that's the one. That's not my trade, but you rocked it, dude. Perfect execution. And then you used all that momentum to take you to where the market should go. Great job, dude. What's fun too, guys, is I go from being a pain in your ass to you find that the better you read charts, the more complimentary I get. Hold it, Debbie. Hold on. Let me find your other. Guys, look at this short trade from Debbie. Oh man, you guys are doing great. And then I want you to see this. It looks exactly the same. Exactly the same. Just go in the other direction. Look up consistency. You'll see her picture. Her big smiling face right in front of you. Jared. Weak triggers, right? But a clear path. Jared, are you in here? So can we talk about annotation again, guys? My face is almost blue, but not quite. Jared, if I were to annotate this chart with rule number one, do I have odds favorable momentum? We're going to go back to advantages here. Do you really? Hold on. I always accept that I may be wrong. So this is where you entered with the small triggers inside of the large triggers. Let me double check my pictures real quick. My odds favorable momentum picture. Jared, what you did is you traded with weak triggers. You traded with triggers. It doesn't have anything to do with divergence, Jared. So thank you for posting because now we get clarity. Odds favorable momentum means that there's a separation between the small and the large. Odds favorable momentum is defined by that separation. This is when the market is likely to push in the direction of the trade. This is your advantage of momentum. When your small triggers return to the large, work their way inside, Jared, this is anything can happen up or down. This creates reversals, this creates pushes lower, but the momentum is gone. At that point, there is no odds favorable momentum. So we sacrificed momentum here, and that's okay. That's not a deal breaker at all. Even with clear path and momentum are two separate things, right? They're two totally separate ideas. They're two totally separate advantages. So when you look at the chart, and this is how my brain goes through. I love it. The first thing I look at is momentum, right? Because that's my first advantage. So without momentum, and I'm going to go through it because it doesn't mean that it's a deal breaker, Jared. But without momentum, I'm going to make sure that I have a clear path. And that's exactly what you did. You're like, okay, my path is clear. And that sold it for you. Rule number 3 says an area inside of favorable large triggers. This Fibonacci resistance is the only spot inside of favorable large triggers. This midband is beyond it, right? So one of the patterns that you're going to recognize, Jared, especially as you go through even more, is that when your areas start hovering above these large triggers, it's less likely to work because price likes to correct and pull back to the triggers. That's why rule number 3 is in place. And if price is already enveloped and sucked into those triggers, and the small triggers are already sucked into those triggers, and the small triggers have already sucked into those triggers, there is such a loss of momentum that that market's probably going to push a little higher. Does that make sense? And this is why I like momentum to lead the way. And then the challenge that you run into, Jared, and I still think that your thinking was correct, right? You're trading with the trend. You have a clear path. But the problem is when this much momentum goes away, and you see it on both charts, is the market going to pull back to this fib? Or is it going to hit a mid band? Or is it going to pull back to 48 up here at another fib? And the reality is we just don't know. But we can see from the loss of momentum that it is likely to pull up higher. So awesome picture, dude. And I love your thought process. And this just takes it one more step. And then other things, if you're going to have an 8-range chart, do you know how to use it, Jared? Like, do you have set rules for what you're using the 8-range chart for right now? Or are you just kind of watching it and growing with it, which is totally cool too? Because your 8-range chart here had a fib and a reversal bar and no triggers through support. And it also created an HVA line right before you got in. So this is one of those patterns on an 8-range chart that I'm saying, oh man, there's a truckload here. And it corresponds with the loss of momentum and it corresponds with the divergence, right? And even your big old honkin' 21-3 chart has weak triggers in the middle of nowhere. It's just a chart read. I like your initial thought. I like the way that you were looking at it. I'm a big fan of the clear path, and I just think that the loss of momentum had something to do with it. And then when you start to notice that your areas are getting above those large triggers, it goes down. And if that large chart turns from an area with three divergences, it's a great chance that it goes at least to the midband. It can. To be honest with you, Snorri, when this divergence printed, it had a great chance of getting to the midband. Oh, you're welcome, Jared. Thank you for posting. The goal is always to be able to just piece it all together in terms of advantages. And Snorri, I want you to take everything John Novak says with a grain of salt. So one of the things about my brother that you guys don't know is that he likes to trade, and he's an amazing trader, and he's an unbelievable chart reader, but he's also aggressive as a pit bull. And he hates for the market to move without him. He really does. So when he says that the mid band's the first target, it doesn't mean a long trade. It just use it as a patience piece. Yeah. Use it as a patient piece. When divergence prints from nowhere, that mid band becomes pretty likely. And I can tell you guys right now, I misused every lesson he ever gave 1,000 times, and that's why I always warn new users. He is just an absolutely means no short. Absolutely, that's perfect. No, you didn't say it. Snorri, I say a lot of things in this classroom that always go back to lessons, and it's not necessarily 100% on your comment. I apologize. I should have clarified on that. Because I always have to take everything that I see and hear and relate it to lessons. PFI, this is you. Everything says up. You go long and make money. I love it. Odds favorable. This is the one we took in class. Beautiful entry. Great targets right there. I'm looking at the first trade where you didn't ignore three divergences. I'm looking at the first trade where you followed all the rules, not the second trade where you traded into three divergences that said that this one was probably going to lose. See the difference between the two? You ignored the only small chart termination condition. What does that mean? So when price breaks an area, the area is broken, is your rule? Or does it take trigger lines to break the area, in which case none of them broke? And that's a misunderstanding of the lesson, PFI. I thank you for posting that. Triggers didn't break the area. Triggers didn't break the area. These two are still very much in effect. So the same idea of termination conditions on the large chart is going to be the same idea for when divergences are broken on the small chart. And let me see if we can find an example of it. Yeah, no worries. Three divergences killed you. That's all it was. Here we go. Two divergences, right? When all the triggers get up, that's your reset. Make sense? So by your line of thinking, dude, all day long on that trade, right? By where your head was in the moment, all day long. And that's, again, one of the advantages of posting in the room. Triggers break areas. Price never does. Price never breaks areas. It's always triggers. It was a good read and it was the right idea. Those three divergences just pushed you a little lower. All right. And then, is this Lex? Lex, so this is the exact same trade that we talked about with Jared. Loss of momentum, no areas inside. What did that one end up doing? Oh, it went up, didn't it? Small gain but risky trade, right? Don't you want the best, Lex? So you're going to train your brain. This is how you're going to train your brain. You forfeited momentum on that one, but you also forfeited the entry area. And man, when 2 out of 3 go, you just got to say, damn it, it's not my money, right? It's just not my trade. And that's okay. And if you took a small gain on this one, there was no reason, right? You should have been just stopped out because if you really believed it was going down, there's no way you should have made 4 ticks on a trade. Nice picture. And then cream white, triggers break areas, right? Triggers break areas. So let's go through the lesson a couple times. This area isn't broken until the triggers get beyond it. So let's go off of that premise. Here, price is breaking, but the triggers haven't. Price is breaking, but the triggers haven't. When the triggers break the area, now the area is broken. Guys, price is going to lead a lot. Nope. Price reaches the area. Where are the triggers? Price extends the area, but the triggers don't. Sure enough, kills it. Price reaches the area, even goes through a little bit. Triggers don't. Kills it. Price reaches, triggers don't, kills it. So, and the reason this happens, they did not, D-Rock, we'll go back to it. Um, why do we say price reaches the area? Can we talk about termination conditions for a second? And I'm going to take a picture. Fibs, and we'll just say potential terms, are where the people who move the market are reacting. Buying, selling, profit taking. So let's let that be the first part of it, right? And guys, if you just say to yourself, every time price reaches a fib, a reaction is going to happen, but the reaction isn't going to happen until price reaches it, right? Like your buyers don't start flinching right here. They need it to reach the fib. Does that make sense, everybody? That's where the decisions are made. So for it to be a termination, we want to see price reach that decision-making point. We want to see price reach that decision-making point. And this is where the buyers are going to buy, and this is where the sellers are going to sell, and this is where the fight's going to happen, right? Why do we teach clear path? Because clear path is further away from those decision-making areas. So Dwight and everybody, when the small and the large get away from the decision-making area, you're not in a position where buyers and sellers are unloading. And this is where the advantages lie for those of us that are smaller traders. When we trade from away from those decision-making areas, because they're making decisions right here again, and sure enough, the market's going down, right? And it's kind of cool. And I'm not going to lie to you guys, I didn't start thinking about fibs as decision-making areas until last week. I just always took them for what they were. They were Fibonacci areas, and these are the rules for termination conditions. But the second I got into the idea that they're where decisions happen, where the people that move the market are making decisions about whether it should go up or down, it changed the whole dynamic. And there's those 3 divergences, and they pushed it all the way back to the buyer's decision-making point. And that's when the buyers said, guess what, guys? Large triggers didn't follow. Everything is above the areas. We're going back up at least to that point where they stole our momentum the first time. And then D-Rock, about the triggers, three divergences. Let me go to just the picture that we did. On the same idea that triggers break areas and it's not about price, there's the triggers, right? And if you look at the divergences, they don't break the area the same way we expect fibs to break, which means that the first divergence, the second divergence, and the third divergence are all still very valid. And that's what gave us the pushback all the way to Fibonacci support. Just barely above, but not broken, right? There's the bottom of those triggers. There's the bottom of those triggers. Your brain is gonna tell you it did it. It broke it. It's just barely there, right? Guys, this is the worst look for a 50-50. How many of you took this 50-50 and got beat? Right there. But Mark, the small triggers broke. Look at how close everything is to the decision-making point. Does that make sense to everybody? When they just peek their nose over the top, they're sitting on the decision point. When they smash through, they're getting away from that trouble spot. And Safia, I see you posted yes. This is why you have so much success with your momentum trades when the area breaks and they come back and test it. That's one of the reasons why that's such a great trade for you. Great lessons, guys. I'm telling you, there's always something to learn. I don't care how long you've been in this classroom, there's always something to learn. All right, first trade. 13-2 triggers were weakening. Short at pullback to the fibs. Got stopped out. We talked about that one, right? Why it didn't work. Because you gave up, and you got in at the area, which I love, Gene. But you didn't have any momentum supporting it. And you also had reversal bars with divergence. Gene, when you see divergence print on a range chart, that divergence typically pushes it higher. For you range chart people. And I don't know about the long there. Second trade, 13 and 8 range triggers roll. At 10:09, I'm not sure that they did, Gene. At 10:09 at 90.20, this was your entry with all the trigger lines below. I see how you could take that first shot. It's aggressive. With a bad bottom and all the triggers below, it's crazy aggressive. But it worked out for you. And as long as you understand the aggression in place, it's good. Paul, I don't have it up, but let's see if the instructions have anything. Build new charts, muting room, market replay, connect. Adding symbols, rolling contracts. All right, that's not it. Paul, I know that you have to go to, let me see if I can pull mine up. What are you trying to add? Can I ask? Mine's coming up right now. I'll get it. Coming up, coming up. 1 second. PFI, Lex, Gene. Hey guys, we made it through all the pictures. Good job. And then there's that pattern again, guys. Price reaches support in a mid-band, triggers don't follow from a bad top, and it's continuing its way up to the next key area, unfinished business. D-Rock, you had one more? PFI, D-Rock, Jared. Is it this one? Where you're a total rock star? Where you had a good bottom and odds favorable momentum and a 50-50 with only one divergence, and it pulls back to support inside of favorable large triggers, and you take money at the trouble spot. Yeah, and I don't know why. It could be, how many days back are you? Hey, Paul, the easiest thing to do, honestly, is just re-download from the resource page. It'll have a whole workspace built for you. 10 D-Rock. It could be a couple different reasons. It could be, did you do all your cleaning today? You did. And I reset and repaired my database this morning. That could have something to do with it. And sometimes our charts just aren't going to match. It could be a couple different things. You haven't done that? That might be it. So Paul, let's see if we can figure it out together. I've never done it. Yeah, reset repair. You do have to be disconnected to do it. Instrument lists. That's not what we want. I've never done this, Paul. I'm not going to lie. Instruments. You want gold? GC, gold futures, add. Okay. Oh, but it makes you set, it makes you literally build it, Paul. You have to put in all the values, or you can go to the resource page and just rerun the indicators, and it'll put all those workspaces on there. That's what I would do, because I'm not a tech guy. And what you can do, Paul, is if you have workspaces that you absolutely love, just save them in a different folder. So like this weekend before you run those, go to Documents, NinjaTrader 8, go to your workspaces, and like take your crude oil and your S&P and just copy them and go to a different folder and paste them in there. So now you have your workspaces in here. And then when you download the new ones, you'll just take both of these and drop them back into that workspace file. So you don't lose the ones that you have that you like. Cool. Sorry I wasn't more help. And then D-Rock, it was a great trade, man. It was a great 50-50. You took quick profits at the trouble spot. And then the fib thing, man, is just, there's all these little things that can happen. Don't let your fibs being different shake your confidence, guys, because it may be because we're a day or two off. It may be because there's you caught a glitch or I caught a glitch, right? D-Rock, you might be right. I might be wrong. John and I went through one day and I was like, John, my fibs don't match yours. My fibs don't match yours. Um, and it turned out that he was wrong. And I was so worried about him. Safia, two divergences off the top. You let it break and pull back. Nice job. The sync lines? I'm not sure what the sync lines are. Alinsky. A little aggressive, Safia, and that push came through, but it worked out for you. Double top, below everything. It's not. It doesn't fit your rules as I know them. And it was stressful. Thank you for putting that. Thank you for putting that it was stressful when you got outside of your plan. Oh, the synthetic lines. I love it. I love your honesty, except when it hurts my feelings, you know? I'm just kidding. You've never hurt my feelings. How do we use... I'm kidding. I play. I kid. All right. I got you right now, Alinsky. How do we use the synthetic lines? Well, first of all, we want them to be favorable. We use the synthetic lines for entries. Okay? So price corrects itself. Price pulls away from these moving averages and then it pulls back to these moving averages. It's just a part of it, guys. It's physics or something. I don't know. So we use the synthetics on the smaller, faster chart, Alinsky. They're just the large triggers from your large chart, from the 13.2. But when they run right on top of the large triggers from the 5-1, when they're piggyback overlapping, it creates what we call favorable large triggers. So we let the two behave as one, creating our range for where we're going to look for areas for entry. And when the synthetics and the large are overlapping, this is like the absolute best look. This is the best of the best for looking for your entry. And this is why rule number 3 is what it is, because we'll use those synthetics and large to create the window of opportunity. So when they're overlapping, you get your smallest window, and then the areas within them become that bounce point. Does that make sense? And you could take a trade outside of it, but your chances are the best when they look like this. That's it, Phil. The synthetics are just the large triggers from the large chart. That's all it is. And then Alinsky, can I compound on it just a little bit? Can I add to that just a little bit? I have a picture that says split triggers. I like to share this. Why I stress favorable large triggers so much. Because price corrects, right? Price corrects back to the moving average. It does. And that's like this technical thing, and it starts to go outside of my grasp of reality. But when they're one on top of the other, there's less choices for that market to bounce off of. But when your synthetics and your large have these big gaps between them, you're just never really sure. Is it going to be the top one? Is it going to be the bottom one? Guys, excuse me just 1 second, please. Sorry, guys. Rule number 1, always say goodbye to your wife, so she never says goodbye to you. So, Alinsky, that's the second half of the lesson, is when they're split, it just creates a little indecision. And man, our money is worth solid looks. It really is. We're in it to win, right? We're in it to win. We're in it to have advantages. And that's really how I teach the class, guys. I want you to always embrace advantages. I want you to always think about what's right, right? What's giving you the best look? What's making things warm and fuzzy for you? What's making you feel as though you would be a fool to miss that trade? And it's just repetition, guys. It's doing the same thing every day until it becomes second nature. It's recognizing the trades every day until they become easy. It's filling up your spreadsheet with every picture that you take. If it's an entry, it goes in the green section. If you're learning how to manage your trades, it goes in the orange section. So you guys that jump ship too soon should be filling management. D-Rock, as you grow in your management plan, this should be a great thing for you, right? Here's one in mind that says if divergence prints on a 50-50 trade. If I'm in a 50-50 trade and divergence prints, it becomes an exit condition for me, right? So I've got that in the management side of my spreadsheet. As you guys just begin learning patterns, Snorri, you are the gap theory king at this point. And you should have 50 pictures of gap theory and chart reading, guys, to the point to where it becomes second nature. Or you could even put it over here in terminations. I've got one that says, is it a term or a target? That reminds me that if price reaches the area, it's a termination. But if it's off in the distance, it's a target, right? So guys, you're going to go through this every day. You're going to look at things every day. You're going to take a million pictures. Commit yourself to 15 pictures a day. Because by the end of the month, that's 300 pictures, guys. And 300 pictures goes a long way to recognition. Commit yourself to participating in class, to posting in pictures every time. Every time you see something, every time you take something. Maybe a good top into place. Might be a good top going into place. Right? It could be. Or it can be a nasty little pushback to one-to-ones that are going to rocket the market up to the moon. And this is, and that's why you wait. Amen, Paul. And that's why I never put might be a good top. Because until it is a good top, I don't want to make short trade decisions, if that makes sense. Until it is a good bottom, I don't want to make long trade decisions. Until I have odds favorable minimum, I don't want to make those decisions. I don't want to get married to that trade. I just avoid it like the plague, Alinsky. Because it goes back to the more you put yourself in the path of a reaction, the less likely you are to have advantages. And news creates reaction. So why on earth do I want to be in a position during a reaction? Let the reaction happen. See what happens. See who wins. And then take advantage of all their hard work. That's what but again, what I do isn't always it. And I always say, let the market be readable before you try to trade it again. So when FOMC printed, a lot of people didn't trade for 45 minutes. I think I took my first short after FOMC about 7 or 8 minutes after the news. The market was still absolutely flying, but the pattern was perfect, and I know exactly what I'm looking for. And it was an easy, fast 2-second winner. But it could have just as much been an easy, fast 2-second loser. So I hate opinions, guys. They cost us money. Paul, you're absolutely right. It could be a good top if I get a full reversal, but even then, I've got things to contend with. So I try to not get married to a direction. I try to not get married to what might happen. Same thing, good termination. Absolutely. Not going long, but not looking for shorts yet. What market is that? The S&P? Nope, two different ones. Paul is Pinieski. Or Piney Ski. Now it's a good top. So the termination creates a full reversal. Now it's a good top. This full reversal is starting to throw a little odds favorable momentum into the mix. But I still have all these stupid fibs to contend with, which means I've got to be just a little bit patient. No, his name on my end anyway, it just says P. I just know that it's Paul from the family photo. I love it when you guys put your pictures up there. Good stuff. Guys, this was a pretty outstanding week. Um, this has been a week of a lot of great lessons for you guys, I hope. And those of you that started this week with me, Let me remind you, sincerely, that by the end of your demo, you won't be a professional day trader hitting 70-80% probably, because that's not realistic. The same way before you ever became an engineer, you weren't building bridges in your freshman year of college, guys. You weren't doing surgeries your first year as a med student. You weren't doing that stuff because it takes time to grow and it takes time to learn. Allow yourself to be a student. But what you will realize is the same reason you went to that prestigious university, the same reason you chose that location for education because of what they offered for what you wanted to do. That's what you realize in your first week, guys. Nexgen's education path. I'm just a messenger. John Novak put all this brilliance together. But the education for Nexgen is second to none, guys. It's live feedback 15 hours every week, right? It's one-on-one in the moment to get you to where you need to be. D-Rock, I can never tell you when it's time to trade live money. But check this out. Post your pictures, follow the rules, simplify. Repeat the process every day until you always take the correct trades. And D-Rock, if you're always taking the correct trades, doesn't it stand to reason that you're guaranteeing yourself that you can win? That seems like a great requirement. And then let me show you something else, guys. The days of blowing out $5, $10, $20,000 learning how to trade are gone. These prop firms will let you take their test. They'll let you go through and test your plan. So D-Rock, you've developed a pretty awesome plan. You want to gain some consistency with it. Apex will let you control $50,000 of their money, and I think for the next 5 days, it's only $36 to control $50,000 worth of their money. And what they're going to do is they're going to say, Apex, if you can make 5 grand before you blow that threshold, if you can be consistent, we're going to let you trade our money. And we're going to give you 90% of what you make. And we're going to let you keep the first 25 grand. So this, guys, is your test. This is where you can go through for $35. They'll even give you a license for NinjaTrader. They'll give you live data. They want you to be successful, but they won't fund you if you're not consistent. Guys, this is where you test your plan. Do you guys remember, was it Mike Tyson? Said everybody has a plan until they get punched in the mouth. Anyone ever heard that? I hate to make it violent in here, but going live is your first punch in the mouth, guys. That's it. You have to have trust. 33rd 40, Dwight. Everybody has a plan. Guys, everybody is a rock star on Simulator. The second you go live, 90% of you are going to pucker up. It's going to take a steam cleaner to pull the pleat out of your chair. But this lets you, it does. Everybody has a plan until they get punched in the mouth. But guys, when you deviate from your plan, don't you lose more? When you begin to abandon advantages, doesn't your win percentage go down? I know mine does. And Phil, I don't know what your plan is, my friend. A lot of times, people take that punch in the mouth because they're looking for too many things, right? Guys, if I give myself 4 trades to look for, you too, Tony, be good, man. If I give myself 4 trades to look for with 5 rules each, that is 20 rules that I have to process each and every time I pull the trigger. If I give myself 2 trades to look for with 4 trades each, I only have to think about 8 things. And the cool thing is most of them are the same thing. So, D-Rock, you want to see where you're at? You want to test it real world without risking a metric butt ton of money? Sign up for Apex real quick. And if you absolutely blow it out because it turns out you're not ready, go back to Sim for a while, right? But for the next 5 days, their 167,000 or their 150,000 or $50,000 account is only 34 bucks instead of 167. They run sales all the time though. So something to think about. And if they're not running their sale, guys, if you go to it from Nexgen's page, it's automatically 50% off. And PFI says 150, or just why not just trade other people's money? You can trade your own. OPM, man. And Apex says $150,000 is $60. And to which I reply, guys, if you can't qualify on a $50,000 account, why spend the money for a $150,000 account to blow through? Debbie, take care. Or do both. Why not? I'm telling you guys, if I can make $10,000 a month and keep 9 of it without ever touching my kids' college fund, that seems like a pretty good thing. So, guys, that's it for the day. Thank you so much. That's it for the week. I hope everybody learned something. I'm so thankful. It's not a percentage. It is not a percentage, Chris. Go play on the site. It's not a percentage. It's you have to reach a goal, and you have to do it without hitting the drawdown. It's fun, Joel. I love my job. I love my job. And then guys, over in Traders Chat, there's a lot of people that do an awful lot. Odds favorable, clear path. There's your momentum trade. Way to get out before the problem. Nice job, PFI. Whoop, where'd your chart go? PFI was solid. Odds favorable, clear path. You're starting to find your groove, brother. Guys, enjoy your weekend. Don't spend your whole